We'd like to call the Business Management Committee meeting to order. First item on the agenda is the approval of the August 28th committee meeting minutes. Can I get a motion in a second? I see a motion, I don't see a second. I see a motion, I don't see a second. Are you sure a second? Okay. The motion has been moved and properly seconded. Can any questions or discussion? If not, can we please vote? The motion passes. The next item on the agenda is a resolution authorizing the renewal of the authority's cyber liability insurance coverage policy, and that'll be led by Donna Jennings, Director of Risk Management. Donna?
Good morning. Good morning, Chairman Pond, Vice Chair Durrett, Mr. Hunt, Ms. Allen, and members of the committee. I'm here today to request authorization to renew the authority's network security and privacy liability insurance coverage for a one-year period from October 1, 2025 to 2026. The purpose of my presentation is to provide the committee with an understanding of the basics of cyber insurance coverage, to provide a high-level overview of the current state of the cyber insurance market, and to discuss recommendations for the renewal policy. Moving on to the basics of cyber insurance. First, let's discuss exactly what privacy and network security liability, or cyber insurance, covers. The coverage is a bit unusual in that in the same policy it provides coverage for both first-party and third-party costs associated with an incident. First-party coverage is for the policyholder and covers expenses we incur because of a cyber attack on our networks. Examples of first-party costs covered by the policy include the following: communicating with affected customers, providing credit monitoring services to customers, executing public relations and reputation management campaigns, forensic services to identify the nature and extent of a breach, digital data recovery, and network extortion. Third-party coverage is for claims for monetary damages made against the authority because of a cyber incident and includes regulatory defense costs and payment card industry or PCI fines and penalties. The policy provides a variety of methods for mitigating the ultimate cost of a cyber event to the authority. Now let's move on to an overview of the cyber insurance market. First, catastrophic risk in the form of aggregation exposure, third-party risk, and supply chain risk is top of mind for insurers, as cyber risks stem from common vulnerabilities in hardware and software, as well as common dependencies from digital supply chain vendors like cloud service providers. Geopolitical tensions are driving uncertainty in the market as insurers look to determine how cyber insurance responds to scenarios arising out of conflict and war. Second, privacy regulations such as General Data Protection Regulation, or GDPR, and Biometric Information Privacy Right, or BIPA, and many others continue to expand, and the size of the fines are a significant concern for both insureds and insurers. And finally, the evolution of ransomware attacks continues to increase in severity and sophistication. Data encryption and business interruption continues to be the most impactful for all organizations. Data theft occurred in over 75% of ransomware events, leading to other losses such as Privacy Act violations. And now let's talk about our renewal activities. We began our renewal discussions with our internal partners and insurance broker in June. We worked closely with our CISO and IT teams to update the MARSH cyber self-assessment tool. Without going into specific details, this assessment tool evaluates organizations' cyber security maturity based on our responses to questions about the top 12 controls that need to be in place at an organization for an insurance carrier to consider our application for coverage. Some of the controls include use of multi-factor authentication, cybersecurity awareness and phishing testing, and cyber incident response planning and testing. Our score on the tool improved from last year, which demonstrates that our controls are continuing to get stronger. Moving on to my recommendations for the new policy. Although the cyber market continues to be very dynamic in terms of claims, coverage, and risk, competition in the marketplace is keeping rates stable. The total not to exceed cost for limits of $20 million is $825,000, but please note that this was a very conservative number, and I'm pleased to report that as quotes continue to come in, we are on track to renew the policy at a total cost of $718,064, which is $769 less than last year's cost of $718,833. I'm waiting on a few final quotes for the excess layers, and keeping the cost essentially the same as last year is a very good result. Now, I respectfully request the committee's approval of this resolution to renew the authority's cyber liability insurance coverage for a total not to exceed cost of $825,000 for the policy period of October 1, 2025 to 2026. Thank you, and I return the floor to you, Mr. Pond.
Thank you, Donna. Could I have a motion and a second? Okay, it's been moved and properly seconded. Any discussion? First of all, I would say it's almost unheard of to have liability annual insurance go down in value. So, price.
We'll take it.
Any questions, Ms. Jennings? I see none. Can we please vote? All right, the motion passes. The next item on the agenda is a resolution authorizing the award of a contract for cybersecurity information and event management software, and that will be led by Lawrence Williams, Assistant GM of Information Security. Lawrence?
Good morning, Chairman Pond, Vice Chair Direct, General Manager Hunt, and Deputy General Manager Allen. Members of the Business Management Committee and colleagues, my name is Lawrence Williams. I am the Chief Information Security Officer here at MARTA. Today I'm here to present for your consideration a resolution authorizing the award of a contract for cybersecurity information and event management software invitation for bid B50676. This procurement represents a cornerstone of MARTA's cybersecurity strategy. A security information and event management system, or SIM, is the foundation of our ability to detect, analyze, and respond to cyber threats across both our enterprise IT infrastructure and our operational technology environments. It consolidates logs from multiple systems, correlates activities, and alerts us to potential intrusions in real time, enabling rapid detection of cybersecurity incidents, performance issues, and anomalous behavior across the enterprise. In today's environment, where transit agencies remain a high-value target for ransomware and nation-state actors and insider threats, the capability is no longer optional. It is essential to protecting the safety, reliability, and trust of MARTA's operations. Some of the key benefits from a cybersecurity perspective is real-time security monitoring, incident investigation, compliance and audit support, operational resilience, and scalability integration. From a business perspective, this contract delivers 4 direct outcomes. Number 1, risk reduction. By providing enterprise-wide visibility, the SIM reduces the likelihood of undetected breaches and strengthens MARTA's ability to prevent service disruptions. Number 2, regulatory compliance. The system will ensure MARTA meets federal cybersecurity mandates and under and under TSA directives, NIST standards, and PCI DSS requirements. Number 3, operational assurance. It integrates monitoring across IT and operational technologies, protecting systems such as the fare collection and train control environment that are critical to safe daily operations. And finally, event preparedness. With the 2026 FIFA World Cup on the horizon, MARTA must be prepared for elevated cyber threat activity associated with high-profile global events. The procurement process was conducted in strict alignment with the MARTA Act requirements and industry best practices. The notice of invitation to bid was March 6, 2025. The invitation for bid was widely advertised in the Atlanta Journal-Constitution, the Georgia Procurement Registry, the Georgia Local Government Access Marketplace, and MARTA's website. The lowest responsive and responsible bidder was selected, and that was Jesco Systems. The bid was in the amount of $1,305,480, and it was determined to be both responsive and responsible. The independent cost estimate confirmed that Jesco's pricing is fair and reasonable when measured against the competition and market standards. The total base term for this contract is 3 years, valued at, again, $1,305,480. This procurement will be funded with 50% of local funds and 50% federal funds from the approved FY26 budget. Funds for subsequent fiscal years will be programmed into future annual budgets for 27, 28, and 29, ensuring continual and fiscal responsibility. In summary, this contract is a necessary investment to ensure MARTA continues to operate securely, reliable, and in full compliance with federal expectations. This procurement process has been competitive and transparent. On behalf of the Department of Information Security, I respectfully recommend approval of the resolution authorizing the General Manager, CEO, or his delegate to enter into this contract for the Cybersecurity Information Event Management System, IFB B50676 with Jesco Systems. Thank you for your time and consideration.
Thank you, Lawrence. I'd entertain a motion in a second. It's been moved and properly seconded. Any questions?
Mr. Chair, I have a slide 3. It's a little different than the slide that's here. DBE consideration, there is no DBE goal. That's not what is on slide 3 here.
But that is correct. There is no DBE goal assigned. We updated it this morning just to reflect that.
But it's not on this slide.
Correct.
Yeah.
So what's on the slide, I'm sorry, to be clear, what's on the slide and on the slide shown is what is correct. I just wanted to make sure it wasn't on the one that you saw earlier, but I wanted to make sure that you were informed appropriately.
Okay, so this slide is correct and not the one on the screen.
The one on the screen just doesn't have that information on it, and I wanted to make
It's
sure that you saw
omitted.
that information. Yes, ma'am.
Anything else, Ms. Scott?
That's it, thank you.
Okay. Any other questions? If not, can we please vote? The resolution passes. The The next item on the agenda is a resolution authorizing the modification of the existing commercial paper program. That'll be led by Rondell Stewart, Senior Director of Treasury Services. Roydell, I'm sorry.
Yes. Good morning. Good morning, Chair Pond. Good morning, General Manager Hunt, Deputy General Manager Ms. Allen, and the other members of the Business Management Committee. My name is Roydell Stewart. I'm the Senior Director of Treasury Services, and I'm here to request the Business Management Committee approve the resolution to modify MARTA's existing commercial paper facility agreements. So today, I'll start by providing some background information on our existing program, then discuss our recommendation, the market landscape, benefits of a CP program, next steps, and then finally the request. So for background, I'd like to just provide an overview of our current agreements. MARTA presently has a commercial paper program with JP Morgan Chase, which is scheduled to expire on November 17th of this year. The program consists of two key agreements. The first is a $300 million revolving credit agreement, which supports the issuance of commercial paper notes for Series 2021B. The second is a $300 million note purchase agreement, which gives MARTA the option to sell Series 2021C notes directly to JP Morgan Chase Bank. Under the revolving credit agreement, a third-party market participant serves as the lender to MARTA, whereas under the note purchase agreement, JP Morgan Chase Bank would serve as the lender. These agreements provide MARTA with quick access to short-term liquidity, typically on about 2 days' notice, and these funds can be used to help finance our capital projects. These agreements provide, there's an annual facility fee of 24 basis points, which equates to $720,000 when applied to the $300 million principal. So to continue benefiting from this liquidity, we recommend two key modifications to the agreement. The first is to extend the term of the agreement by 3 years by moving the maturity to October or November of 2028. And then the second is to reduce the agreement's capacity from $300 million to $200 million. This change in sizing would lead to notable savings on the annual facility fee while ensuring that MARTA still retains ample access to the necessary liquidity. So now just looking at the market landscape, we examined comparable facilities with our financial advisor, and we can see that over the course of the last few years, since the agreement was initially struck, interest rates have moved up meaningfully, about 4%. Based on the research that we've done and the market analysis we've done, it supports accepting the offer from JP Morgan Chase. And I would note that MARTA is one of only a dozen transit agencies that has achieved a AAA rating, and we believe that that contributed to our ability to secure these favorable terms. So just again, talking about the benefits of a CP program, we can see the benefits are that it provides access to low-cost borrowing. The CP market is highly liquid, so currently there's more than $1 trillion of CP that's outstanding on the US market. So fundamentally, that means there's over $1 trillion available from investors to lend to entities like MARTA looking to borrow on the CP market. Another benefit is that there's funding flexibility, so maturities range from 1 to 270 days, and we have several ways to borrow under the program, as I mentioned, borrowing through the market, through JPM Securities, using the revolver, or borrowing directly from JP Morgan Chase Bank. And again, the CP commercial paper, we would use that as a funding source for our capital projects. So looking ahead, next steps, we would like to obtain BMC approval today for the modifications I just discussed, then obtain full board approval on October 9th, and then complete the execution of the documents in the days thereafter, sometime between October 10th and 14th. So with that, I respectfully request the MARTA Business Management Committee approve the resolution to modify the existing 2021B revolving credit agreement and 2021C note purchase agreement to reduce the maximum principal from $300 million to $200 million and extend the expiration date by 3 years from November 17th, 2025 to October or November of 2028. So, thank you. With that, I'll turn the floor back to Chair Pond.
Thank you, Mr. Stewart. I'll entertain a motion and a second. It's been moved and properly seconded. Or is there any questions for Mr. Stewart? Mr. Zagati.
Thank you for the update. 2 quick questions. Just one, historically, how often have we drawn on this facility? Like if you were to say, is it monthly, is it quarterly? And then 2, I know we brought the limit down. Just if we look historically, how much have we drawn on this at a single time? Like do we usually end up pulling 50 million and having that out there? Is it 100? Just would love to better understand.
So we actually have not used this commercial paper program, and that's part of the reason that we're recommending bringing it down. So when it was executed back in 2021, that was still during the COVID time when there was a lot of uncertainty. So that was part of the reason that we, secured such a large facility, because we just weren't sure what was going to be happening in the financial markets. We're in a more steady time now, so that's why we want to bring it down. So we haven't used it, and also, we got a lot of what we call COVID money support from the federal government, so that those reserves are being spent down, and so that's why we think, are you still able to hear me? Okay. That's why we think, we want to maintain the facility, because we don't have those large reserves that we built up from the COVID funds, but we don't need the
Any other questions? Okay, can we please vote? I'm missing one other.
I'm a yes, Chair Pond.
Okay. Got the other one. The motion passes. The next item on the agenda is a resolution authorizing a modification in contractual authorization of Palo Alto Firewalls utilizing the federal GSA contract. That'll be led by Tyson Morris. Tyson?
Good morning, Chairman Pond, Vice Chair Durrett, Mr. Hunt, Ms. Allen, Mr. Hurley, and other members of the Business Management Committee. My name is Tyson Morris, and I'm the AGM CIO of Technology. You'll see a theme here today amongst all the presentations that we're working to strengthen our cybersecurity posture. Like you said, I'm here to present the resolution authorizing a modification in contractual authorization for Palo Alto Firewalls, RFP P50220, utilizing the Federal General Services Administration, or GSA, contract. The Palo Alto Firewall is a key safeguard for MARTA's enterprise network. It protects MARTA by monitoring all traffic in and out, stopping unauthorized access, and ensuring critical services remain available. Renewal of this application utilizing the Federal General Services Administration contract ensures we continue to operate with resilient, scalable, and well-managed device mechanism in place that provides advanced threat protection, shielding MARTA from sophisticated cyber attacks and emerging threats before they impact operations, granular policy controls allowing precise control of who can access what based on users, application, and data, scalability and performance, delivering the capability to keep pace with MARTA's growing infrastructure and writer demands, compliance visibility, providing detailed monitoring and reporting to meet regulatory requirements and support audits, centralized management, ensuring consistent security across all sites with simplified administration, and finally, risk mitigation and reputation, reducing the risk of costly downtime, data loss, and reputational harm. The current 3-year base term contract from November 10th, 2022 is valued at $1,396,399.44. The additional funds being requested is $2,303,977.60, bringing the total contract amount to $3,700,376.60. This 3-year contract extension is funded with both capital and local operating funds, and funds from subsequent fiscal years will be included in subsequent annual budgets. No DBE goal was assigned for the original contract nor for this modification request. In conclusion, the Department of Technology kindly requests the Business Management Committee recommend the approval of the resolution authorizing a modification and the contractual authorization for Palo Alto Firewall's RFPP P50220, utilizing the Federal General Services Administration GSA contract. Thank you. Now return the floor to you, Chairman Pond.
Thank you, Tyson. Entertain a motion and a second, please. It's been moved and properly seconded. Any questions for Mr. Morris? If not, can we please vote? Ms. Bolton Harris votes yes. The motion passes.
Thank you.
The last item is a brief financial highlights, and that'll be led by Chayton Agarwal, right?
All right. Good morning, Chair Pond, General Manager Hunt, Deputy General Manager Allen, and members of the Business Management Committee. I am Greg Patterson, Deputy CFO, and it is my pleasure to present MARTA's unaudited financial highlights for fiscal year 2025. You have the presentation up? Oh, we got it. There we go. All right, just as a reminder for everyone, these figures are unaudited and they're subject to change should our auditor recommend any adjustments as part of year-end closeout. So moving on to the operating budget highlights for the fiscal year. At a summary level, MARTA budgeted operating sources of $654.5 million. That includes the net revenue and operating carry forward. Our actual revenue was $692.2 million, which was $37.7 million favorable for the year. Our net expenses were budgeted at $654.5 million, but actual expenditures were $744.3 million, ending the year at an $89.8 million unfavorable position to budget. The primary driver of this was third-party liability expenses, which you will see on the detailed breakdown. The net impact of this for the fiscal year was an unfavorable balance and variance of $52.1 million. Now presenting in detail, I'll first go over the favorable revenues. So MARTA benefited from a positive sales tax revenue, ending the year with a favorable balance of $12.7 million. MARTA was also favorable on title ad valorem taxes by $28.2 million due to payments from Clayton County that cleared an outstanding balance from January of 2017 through December of 2024, as well as the resumption of ongoing monthly payments since that outstanding balance was reconciled. Our passenger revenues ended unfavorable by $0.9 million cumulative for the year. I'm going to go into some additional detail on this particular statistic once we get to the ridership, the key ridership performance indicators a little later in the presentation. On lease income, we ended that $2.1 million unfavorable due to a required adjustment for the Government Accounting Standards Board at the end of the fiscal year to bring our balances in line with the official balances maintained with our forecast, originally placed in Oracle, and then we have a subsystem that we maintain the actuals, and we were just reconciling those two. Other revenue ended unfavorable to budget by $8.2 million, and that is primarily due to a combination of lower than forecasted advertising revenues from bus shelters and our advertising policy change, as well as interest on reserve balances. With respect to year-to-date expenses, salaries and wages were favorable by $10.3 million due to higher than forecasted position vacancies. Overtime was unfavorable to budget by $10.6 million, driven primarily by vacancies, our special event calendar, and absenteeism. Total benefits were also unfavorable to budget by $14.7 million, driven by an annual adjustment to non-represented pension benefits, as well as some unusually high healthcare claims and workers' compensation claims that we saw. Contractual services ended $6.2 million favorable to budget. This was driven by underutilized external support contracts and operating equipment contracts. Total materials and supplies ended favorable to budget by $2 million, driven by lower than forecasted costs for fuel and parts throughout the fiscal year. Our largest hit to expenses was other non-labor, which finished the year at $42.8 million unfavorable due to the sharp increase in third-party liability expenses that we saw. Finally, the capital cost allocation was unfavorable by $40.4 million. Moving on to the specific financial performance for the month of June, revenues were favorable by $2.9 million, and expenses were unfavorable by $6.1 million. The net impact of this was a $3.2 million deficit for the month of June. Breaking this down, on the revenue side, our sales taxes had an unexpected drop at the end, ending $1.9 million unfavorable to budget. That trend continued for a slight unfavorable balance in July, but then it popped right back up in August, so it's not really enough to present a trend yet. It's more of a blip on the radar. Just wanted to add that little bit for extra context. Passenger revenue was $0.7 million below the forecast, which followed the trend from the month of May. And it's worth noting that while we have reconciled and identified the drivers behind some of the issues we see on the passenger revenue, the resolution of our lost taps, which you might have heard me mention before, it relies on some follow activity that we expect from our vendor Cubic. As such, there are likely still missing taps showing up in this figure because we've identified the problem, but we have not fully resolved it yet. On the expenses side, overtime was unfavorable to budget by $700,000 due to the ongoing vacancies and absenteeism. Total benefits was unfavorable to budget by $3.1 million due to higher than typical medical claim costs. We have some pretty large outliers there. Contractual services ended favorable by $3.2 million due to lower than planned use of operating equipment and system operation contracts. Materials and supplies were unfavorable by $1.4 million, primarily due to higher costs for repairs and fuel prices in the month of June. And finally, capital charges were unfavorable to budget by $4 million due to our lower than forecasted direct and indirect expenses to capital projects. Moving on to our ridership key performance indicators. For passenger revenues through the year, we saw our revenues fall below our forecast. If you note the month of May, we processed a large correction to reconcile our stored value to missing taps on the rail system. This goes back to that earlier slide when I mentioned our passenger revenue. So it's important to note this reconciliation could go back as far as 2 fiscal years worth of stored value and missing taps. So it's a little difficult to confirm that that revenue was generated in this year, but this was the effort that we spoke about where we identified that there were missing taps in the system. We were able to reconcile the remaining stored value that was out there on the cards we saw compared to what we were showing in our accounts, and this reconciling transaction is what you're seeing. I think we covered that. Moving on to the next slide, bus ridership figures. We performed at or above the ridership forecast across the first half of the fiscal year. The second half fell slightly below the forecast, but as a reminder, the January performance fell specifically due to canceled service on several days due to snow and ice. June's performance fell below the forecast by 200,000 unlinked trips, but above the prior year by 100,000 trips. And then on rail ridership, you can see the impact of the missed trips throughout the fiscal year. While fare evasion is certainly likely still contributing to this, we also know that some of the missed trips had an impact on our read of the trips as well. So June's performance matched the prior fiscal year. I will now hand the presentation over to Mr. Chetan Agarwal for a review of our capital highlights.
Thank you, Greg. Good morning, Chair Pond, GM Hunt, DGM Allen, and members of the Business Management Committee. My name is Chetan Agarwal, Assistant General Manager of the Centralized Program Management Office, and happy to present the capital highlights for fiscal year 2025. Okay, this slide shows the sources and utilization of funds for our State of Good Repair program. Oops. Starting with the sources of funds, we show our beginning balance of $85.7 million against a budget of $10 million. This is because we had spillover of funds from the prior fiscal year. Sales tax revenue was realized at $247.5 million against a budget of $239.6 million due to a strong economy and inflationary pressures. For federal and state funds, you may recall that we first pay for all work out of pocket and then file for reimbursements. A couple of projects did not proceed at the planned pace in fiscal year 2025, and therefore we realized federal and state revenues of $82.9 million against a budget of $90.5 million. Finally, our reserve utilization and debt issuance was realized at $54 million and $350 million against budgets of $100 million and $275 million respectively. The usage section of the slide shows the state of good repair program segmented into the FTA asset categories. Overall, the state of good repair program, we spent $416.7 million against a budget of $550.5 million. This represents more than a 75% spend for fiscal year 2025. For facilities and stations, we spent $107.8 million against a budget of $181.9 million. For maintenance of way, we spent $4 million against a budget of $18.2 million. For non-asset, we spent $48.3 million against a budget of $80.5 million. For systems, we spent $105.3 million against a budget of $113.9 million, while for vehicles, we spent $151.2 million against a budget of $156 million. This slide shows the performance of the top 10 projects for the State of Good Repair program. I will now provide an update on a select few high-profile projects. Starting with the procurement of the CQ400 railcar procurement project, pleased to inform you that the project is proceeding really well. You may recall that from a financial perspective, $57 million worth of a change order was awarded to Stadler after our fiscal year 2025 budget was established. You may recall that $25 million of this change order was paid in FY 2024, and the remaining $32 million was paid in FY 2025. The rail station rehabilitation program is proceeding really well. We spent approximately 90% of our fiscal year 2025 budget for this program. Work is progressing really well at a lot of stations, noteworthy at 5 Points, Airport Station, and Indian Creek. For the Automated Fare Collection 2.0 project, the spend came in over 100% of our planned budget. This is because of our commitment to get the project operational prior to our World Cup in Q4 of FY 2026 and completing the project by the end of calendar year 2026. On the bus procurement project, this project really entailed the procurement of 37 buses, and through FY 2025, we have procured 34 of the 37 buses. On the train control systems upgrade project, this project really enables continued support of the existing system until the CBTC system is up and running. The project progressed as planned in FY 2025. Moving to the next slide, this slide talks about the sources and utilization of funds for our More MARTA City of Atlanta program. Starting with the sources of funds, we show our beginning balance of $246.2 million against a budget of $243 million. We show realized sales tax revenues of $57.5 million against a budget of $55.6 million. We realized state and federal reimbursement revenues of $6.1 million against a budget of $34.7 million because a couple of our projects did not proceed at the planned pace. Other revenue was realized at $11.4 million against a budget of $4.9 million. The usage section of the slide shows that we spent $69.5 million against a budget of $168 million. This slide shows the performance of key projects within the More MARTA City of Atlanta program. Starting with the MARTA Rapid A-Line project, we spent nearly 67% or $40 million of the $60 million planned budget. This is despite significant delays to the schedule we encountered due to several unforeseen site conditions. We encountered underground utilities, a basement structure, a parking structure, and 2 sets of railroad tracks. All of these issues significantly delayed the project completion date by about 9 months. Because of these issues, we are now projecting a revenue service date of April 2026. On the 5 Points transformation project, the progress in FY 2025 did not keep up with the plan because the project was on hold until Q4 of FY 2025. Happy to announce that the project is now underway. On the Cleveland Avenue Metropolitan Parkway ART project, we are coordinating procurement for the construction contractor. When the fiscal year 2025 budget was developed, we had anticipated the project to already be in construction. However, progress fell behind the plan because the initial procurement resulted in only one bid, and the bid came in 3 times the amount of our initial independent cost estimate. To make the package more attractive to potential bidders, we added additional scope and reinitiated the bidding process. On the Bankhead platform extension project, the project is proceeding through final design, and we expect the design to be completed in FY 2026. This slide shows the sources and utilization of funds for our More MARTA Clayton County program. And starting with the sources of funds, we show our beginning balance of $258.8 million against a budget of $246.9 million. We realized sales tax revenues of $35.5 million against a budget of $34 million, while we realized federal and state reimbursement revenue of $2.2 million against a budget of $19.6 million. Other revenue was realized at $12.3 million against a budget of $9.9 million. The usage section of the slide shows that we spent $7.1 million against a budget of $22.2 million. This slide shows the performance of key projects in the More MARTA Clayton County program. Starting with the MARTA Rapid South Lake project, the project did not progress as planned due to scope changes, peer reviews, and negotiations. Despite these delays, we completed NEPA, and contract for final design was awarded in June 2025 to keep the project moving forward. For the Clayton County Multipurpose O&M project, you might recall that the project has 2 funding sources. 83% of the project is paid through core penny, while Clayton County contributes the remaining 17%. The project further has 2 phases, a demolition phase and a build-out phase. The demolition phase started in December of 2024. It encountered some issues, but it is very much underway, and we expect the completion of the demolition phase in October of 2025, next month, while the design for the build-out phase is underway. In summary, we closed FY 2025 with strong revenues, steady progress on our highest priority projects, and a clear focus on delivering our key commitments, especially those around the FIFA World Cup and our community promises. With that, I'll turn the floor back to you, Mr. Pond.
Thank you, Chayton. Are there any questions for Mr. Patterson and Mr. Agarwal? Mr. Frison.
Yeah, I've got a couple of questions. So, Greg, could you help me on the slide where we made the adjustments for the mistaps, and I'm looking at slide number 10, like this one here. So these adjustments that were, these stored adjustments that were determined, that were eventually accounted for, wouldn't it have made sense that you did some type of prior period adjustment so that this would be more spread out? Or I don't know if that was possible, but that would have made sense in terms of balancing out the activity for the collection of this.
So that would be the ideal scenario, Mr. Frierson, if we could. The problem is what we had to do is a kind of group adjustment, because we were able to recognize the total delta between our stored value on our books and the stored value out there on the cards, but we couldn't, by a transactional basis, trace it back to when the event occurred that we should have recognized the revenue.
Okay.
That's part of the data loss that we were experiencing.
Okay, so that makes sense then. And so then when we look at this total for the total year of revenue, I guess that's reflected in the passenger revenue, and it's still running a deficit. Is that correct?
That's correct.
Okay, even with all this adjustment.
Even with the adjustment, we're still running a deficit.
All right. All right, so that clears that up. Then my next question has to do with the lease income activity. So we ran a deficit of $2.1 million in that. So help me understand that. I know that Gatsby was doing some adjustments too. At one time there was a conversation about us changing the way we were tracking lease agreements and lease activities. Is that adjustment has to do with with those requirements from Gatsby to do that?
So we have two accounting pronouncements under GASB here.
Yeah.
It's GASB 89 and GASB 96. GASB 89 deals with leasing of property, and GASB 96 deals with subscription-based software products. And so as a result, both of those end up in our capital books, and at the beginning of the year, we build a forecast of what we expect those to be against. And so at the end of the year, we do a true-up to bring those balances back in line with an official balance that we maintain of the actual records.
Mhm.
And really what you're seeing primarily is the result of that true-up of those two things, between an estimated forecast and an actual. But the actual is done basically all at once at the end of the fiscal year.
Okay, so we're doing this now in, this is for fiscal year end of June. Okay, so we're trying to shore this up for the end of June.
Correct.
Right?
Correct.
All right, that makes sense. Then my question has to do with the capital highlights. I know that are faced with some federal funding deficits, some federal funding that's not gonna come through. And I'm looking at slide number 14. That's more Atlanta.
Is it this one?
Yes, yeah, that one there. So we can clearly see that, that the federal funding that we may have applied for, we may not be able to get. Well, that's on state of good repair, but my question is, if we're not receiving the federal funding that we are anticipating, then MARTA will have to be responsible for making the difference, or how does that work? And that might be a question also that Jonathan might be able to help me with.
So this doesn't represent a loss of a funding award or funding allocation. What it represents is that when we forecast our revenues for federal,
All right.
it's based on the planned construction schedules of these projects. If they execute on time, then we incur the expense, and we have to then ask for reimbursement from the federal government.
Okay, understand.
But if we haven't made that progress on the federal project, then we can't request reimbursement, and so you'll see the figures come in under on here. It's not that the money's gone away, it's that we can't bill for it within the time that we expected.
Okay, all right, so it's a timing issue.
Yes, sir.
right? We may spend the money for it, but when we request it, when we'll get it back from the federal government.
Yep. Yeah, that's correct. And we make every due effort whenever there's a potential chance for expiration of those. And in fact, we had an exciting rush to make sure we could spend down the summer hill in time before the expiration and then get full drawdown and reimbursement for that. And I'm pleased to say that we were able to achieve that. So.
Yes, yeah, I know that was reported at the board meeting. Okay. Oh, thank you. Those are my questions. I had a lot, but
Mr. Hunt, you wanted to say something?
Yeah, Summerhill's a great example. Ideally, we would have been able to execute and draw down on all those funds in the last fiscal year, but with some of the project delays, it rolled over. We did meet the grant deadline, so we were able to draw down all the money, but it's less than for the last fiscal year, and this year we'll capture it, which would give you the negative reporting here. But we still maintain we got all the federal grant money.
Okay, Ms. Ide?
Couple of questions, and this one's probably should go to Mr. Hunt. You know, looking at the last, you know, now we have the fiscal year on our ridership and passenger revenue. You know, it's a little disappointing to see it flat and even going down a little bit. So I don't know what commentary you may have on that.
We as the authority, we're not at all happy with the ridership levels, taking away some of the challenges with respect to taps and whatnot. Let's put that to the side. We know that always kind of plagued us, but we're fixing that with AFC 2.0, our Better Breeze system. But beyond that, we know that our ridership has been down. We're addressing it through our safety enhancements, which we've reported to the board. We're addressing it through outreach to our partners. When I say partners, I mean our large workforce housing, workforce employers in the region, as well as general outreach, which you'll all see more and more of that in the coming months in order to boost ridership. But no, we are not at all satisfied with this.
Yeah, I mean, I think we all agree we're like past the point of blaming this on COVID, of, 12 months ago
Correct.
wasn't COVID.
Correct.
And I know we have a lot of, large ticket item fixes to the system of whether that's the, payment technology, the fare gates, new buses, new trains, all of that, most of which isn't gonna roll out until next year.
Well, with regard to the trains, we're gonna start rolling those out as soon as they complete testing. So you'll begin to see trains in revenue service one by one. Buses will continue to come on, new buses will continue to come online. We have large deployments in Q1, in the beginning of Q2 for bus network redesign, automatic fare collection system 2.0, and bringing actually some stations online as well in terms of our rehabilitation. But it's a lot of items that we're planning to deliver over the next 8 to 9 months, which hopefully will help with these numbers. But fundamentally, it's going to take some core operational changes, as well as displaying more care towards our customers to help bring them back.
Yeah, that's what I know it's really hard to put your finger on the pulse of what's going on. Is it I think that there could be, many reasons why people don't ride transit as much of, people aren't back in the office, and do we have the right, monthly, fare set up that it makes sense for people to be, riding the system or not. It may be a perception of safety. It may be a bad experience the last time I rode it, but I don't know how much of this is a PR issue or how much of it is we've got to fix things on the system issue.
It's a bit of both, and I should say both, all three. Perception is one, but perception can be fixed when we get core structural, capital, operational items fixed, and then the human capital.
Yeah.
Our employees, our staff, going out there, getting in touch with our product, which is transit, taking people where they want to go, when they want to go, and in a manner that's respectful of them.
Well, hopefully 6 months from now, we're going to be looking at different numbers when we look at this. I know my seatmate has lots of technical questions about the numbers, so I'm going to leave most of that to him. But one on our, well, I guess I have two. One on our people front, it looks like our salaries and our overtime, from an accounting perspective, we're sort of a wash, but I'm assuming that we don't get the service levels that we want and the employee satisfaction that we want when we're relying on overtime to fill the gap. And so where are we on headcount and, moving, forward? Are you seeing trends that are going to have us relying less on overtime going forward? Or are we not there yet on filling seats?
We are aggressively, on our operations side, which is where a lot of these numbers are driven by, we are aggressively going after and hiring. More administratively, there's still our hiring freeze in place, which is why you kind of see that balancing out. You'll see some positive numbers as the finance group each month continues to accrue what savings we have from the freeze. But overtime is a multifaceted issue with showing up, workforce, FMLA, and other items that are at times abused. Not totally, but at times.
My last sort of question, comment is, I know Mr. Pritchett's hiding over there. It's not his issue anymore, but, well, I guess it sort of is on these settlements. That's a huge, huge number. And I will say to my colleagues, I met with our MARTA leader, Deborah Silcox, this week, and with the Speaker of the House, and both were very receptive to hearing about some additional protection for MARTA on settlements, and I think you spoke to the speaker also.
Yep, I met with the speaker early this morning, had a wonderful meeting, very appreciative of Speaker Burns' support as well as the state support with respect to all things MARTA. Also, we're very supportive of the tort reform that passed last year, which is excellent, will benefit MARTA, but here we are still not on equal footing with our other transit agencies within the state that enjoy eminent domain. We are not seeking eminent domain, but we would like to be on equal footing with our other agencies. Dwayne, if you have any other items you want to chime in on, please do feel free.
Just as far as what if we're going to expect a better number going forward than what we see for our
Yeah, I would
settlements.
say, I mean, we'll have to see when the results actually come in, but the tort reform bill, I think I have very high hopes for. Like, I'll give you a good example. Remember the worst day ever for the settlements when a few months ago when we settled like $32 million worth of cases or something like that one day. Two of those cases, the settlements in those cases would have been maybe 25% of the amount. So we would have been talking about, say, 8 million instead of 32 million if the tort reform bill had been in effect for those cases. So those are the type things that I see going forward. Like I said, we'll have to see, if the reality bears that out. But that's what it looks like to me. So I have high hopes for it.
And remember, it'll take a little while for it because you still have to have the incident, so it's going to take a while for this to impact us. It's not immediate.
Anything else, Ms. Ida? Ms. Hardage?
I think Mr. Zagabe was first, but we all got cleared on our microphones at the same time.
We'll go alphabetical your way.
Okay, great. So I'm going to say, I'm just going to, a lot of the stuff I can mark off, Ms. I made some of my points, but on patient revenue, when looking at the whole, I really do think safety is one of our number one issues. I'm just going to tell you, from everybody I hear and everybody I've talked to, and when I've ridden the train lately, I sometimes strike up a conversation if they look like someone I want to talk to. And, we have these conversations, and they'll tell you I don't write it as much as I used to, or I write it every day. It just depends on who you're speaking with, but safety is what I hear more than anything. And I do think we can do a better job at PR, and I think we are this week. I see a lot of positive things that we're doing, but I think we might have missed the boat there for a while on some opportunities that we might have missed. As far as the capital expenditure and overages, some of the stuff that we incurred this year, I'm hoping going forward we won't have to look at some of the delayed permits and penalties that we obviously incurred some money on that, the underground parking decks, the trolley track. Some of the stuff that I hope in the future we can find a way for that not to happen. And then nobody's talked about benefits, but I will say under workman's comp, I hope that we have the most current way of managing workman's compensation. It will be something that will just drain you if you do not have the right people managing that for you. And I know it's an outside firm, and I don't even know who that is, but I'm just saying, please make sure that we have that, because I know in today's world, you just got to have it, because that's what happens to your numbers.
Yeah,
Thanks.
we do have the outside firm, but workers' comp lead feeds back into somebody not being there, which feeds into overtime, and it's a
Yep,
vicious
it's a
circle.
vicious cycle.
But we are addressing that internally and have a group that's working on it, and that group is, Mr. Lopes is currently analyzing along with Ms. Dawkins,
Okay.
analyzing that group.
I just want to
very
make sure,
closely.
because when you look at that number, it just makes me
Yeah,
wonder if
that's a
maybe we
big driver of it.
might be a better way to do that. Thank you.
Mr. Zagabe?
Thank you for the update. I've got some questions on OpEx and then some capital questions. I'll start with OpEx. Just the first one, it's all on slide 4, which we're on right now. Just this piece on other revenue and advertising contracts, like a lot of these questions are in the vein of, I mean, 25 is baked, we're looking at 26, but as we forecasted 26, are we addressing those other revenue problems, or is that something that we expect, and have we forecasted that appropriately?
So just going through, we produce a forecast that probably at this point still is not accounting for some of the delays we've had in establishing a new advertising contract. So more than likely, when we start seeing the results for the current year, we'll probably still see them a little down. And that is one of the primary, well, there's two primary drivers of that. The first one, when we're talking just advertising, is our bus shelter advertising. And we just haven't executed a contract to resume that yet. And then the other one is the change in our advertising policy. For the most part, that should have been tampered back in the expectations for the upcoming budget year, which is what we had put into our forecast. But we will likely still see a dip from the perspective of we anticipated starting July 1, we'd have a new advertising contract in place, and we do not yet.
Could I?
Go ahead.
input? All of those comments are correct, and thank you. MARTA, the staff, is going to be bringing some proposals forward to the board in November in terms of maybe relaxing some items in our advertising policy on a temporary basis to capture a large amount of revenue that's going to come through for World Cup, some innovative things, as well as some innovative things around our parking pricing. So that's coming. We see it, and we are going to be bringing something to you in a month and a half, and hopefully the board will approve it to allow us to do some innovative stuff to capture more revenue.
Awesome, that's great. The second question is around benefits. I heard you mention that, you know, we felt like we had anomalies in the benefits of this past year. Haven't been on the board all that long, but I feel like the benefits number has been in the red often. So again, in the vein of looking to 2026, I mean, how are we thinking about the benefits costs in 26, and are they similar proportionally to 25, or have we built in a belief that benefits might be more expensive?
So typically when we're taking a look at the benefits, the primary things we're looking at are the administrative fees of administering healthcare, for example, the potential for claims that we're expecting, because as a self-insured, we pay the claims. And then we take a look at the usual employee benefits as well. So when we look at the accounts that drive this, the major drivers were pension adjustments, which are driven over time based on performance of the market. We make our best forecast of what that's going to be. If the market performs worse than we thought, there'll be a negative adjustment. If it performs better than we thought, there's usually a positive adjustment. The big anomalies that we speak of are statistical outliers on healthcare claims.
Yeah.
There are 2 or 3 particularly large ones. They're still ongoing. We expect we'll still get those. We're not entirely sure when they'll drop off or if new ones will show up, but we do expect that they are in fact outliers. So when we forecasted the budget for the upcoming fiscal year, we tried to stick closer to what we had before, because we were hoping that we would not see as many of the outliers. We are finding, though, that some of them are carrying on, the expenses are carrying on to this year as well.
Yeah. Okay. And then, I mean, Greg, we've spoken about this before, but here's kind of my concern as we look at fiscal year 26, and like, I'm going to ask a lot of questions all year on fiscal, but here's a way that I think about the budget, and I don't know if you think of it this way as well, but I kind of ignored carry forward. Like, that's not OpEx or true revenue. I ignore that 27 million, 28 million in tax ad valorem, because we got this big one time that we can't expect anymore. And then I kind of ignore the legal settlements and this other non-labor 42 million, because that's what a reserve is for, right? So if you take those and you net them, those pieces I said, that's like 19 million of, of one-time revenue that we shouldn't expect, right? And then you look at a $50 million kind of operating expense deficit, and you're like, okay, so on a run rate basis, like ignoring the one-times and the carry forward, we ran 60 million, like just on a normalized basis, right? And I know that as we look forward to next year's budget, we're really focusing on the expenses line item, but I would just love to maybe hear how we're feeling into this fiscal year. And I hear about the hiring freeze, but some of those numbers say you might need to be thinking beyond a hiring freeze as we think about the expense envelope.
So responding to that, I think you're exactly correct, that given what we're seeing right now in the performance of the budget versus what the plan was, unless we see some noteworthy changes in how we execute the budget, we'll probably be looking at some additional tightening, because we have to, and you've heard me mention this before in previous meetings, one of my main goals is to remove the concept of prior year carry forward, or because really it's, we've been able to deal with the balance, but at some point you're really working through your savings account to handle things, and that's why my goal was, as part of a 3-year plan, was to get there by 2028. I'd love to get there sooner, but the reality of doing that means you have to make additional planned expenditures to, you have to reduce your planned expenditures. You got to cut things more. And so one of the things we're always doing when we are looking at where we are cutting, the question is, at what point do we run into, we cut too deep in some area? And so we've tried to be very judicious in that so far. And, you know, I've signaled to all of our leadership and to board that we are looking at it. If it's not fixing the issue, we'll have to cut deeper. And I think that's the same posture we've had before. It's still the posture we have going into the next year. And we're carefully monitoring the performance each month to see where specifically we should be thinking of targeting that.
I'll just say this, and I know, like, when people hear the word cuts, it's a scary word. I mean, I work in a company where similar words float around. I would just say, as an organization, having gone through COVID and having gone through a period of being very well capitalized, I'm sure our priorities grew, our initiatives grew. Like, there's a lot of scope that didn't exist in the organization 6 or 7 years ago, but the ridership is down. So, you know, it's not, I would call it refocusing the organization on the things that are critical to the rider experience, to safety, to all those pieces. You know, I look forward to the ongoing financial updates, because I think this is going to be a big topic of conversation throughout the year.
Thank you, sir.
Thank you. And then on the capital side, I just had a few questions. One, on the debt issuance, I'm looking at page 12. Just looking at this and looking at our sources of funds and our uses, what drove us to want to take out $350 million in debt when, you know, not to say we could cash flow our capital program, but it seems like a lot of debt, and we're taking on debt costs when we're not actually expending at that rate.
So I'll open up with a start, and then I may ask Roy Dell, if he's still in the room, to come up and speak on this. But at a starting level, one of the things that we were examining when we had put together the budget versus when we were looking at our execution, you had heard early on about the discussion about how we had that larger payout for Stadler. We also saw some other larger payouts for some other projects as far as what we saw on the horizon. And we also saw where our reserve balances were, and thought if there's an advantageous time to have a healthy reserve, that should be part of the discussion, which I know was one of the considerations in the amount. But I may ask Roy Dell to speak a little more to it.
Yeah, I mean, you know, we have a cash flow forecast, capital plan, you know, financial forecast, and that was, you know, ultimately the right amount of debt that we needed. So we issued 327 of debt in terms of principal, and so we issued at a premium. And so that's the cash that we actually received, but the principal was 327, and we had 23 million in principal that was paid above that. But we had the eligible expenditures that we were able to reimburse ourselves for, so that's kind of really where we, you know, came up with that number based on eligible expenditures for reimbursement. Because again, we hadn't issued any new money for a few years. So we had eligible expenditures that had built up, and then we issued a little bit more than that, you know, just kind of looking forward to, you know, fund a few more months of future spend.
Okay. Yeah, I'm just looking here and I see a budget of 275. I see us underspending on our uses and then over on the debt. And I'm sure we have forecasts. I guess maybe from a board standpoint, our expectation probably should be that our uses are going to go up substantially. That's, we've maybe taken out the debt ahead of the expenditure. Is that fair?
Yeah, so when we took out the debt, we had, I think it was about 50 million-ish that went into a construction fund, and then we drew it down after that.
Okay. So. My only comment here would just be is, I mean, we often are in a place where our capital budgets are aspirational, and then our expenditures come in lighter because, for a multitude of reasons, but just making sure on the debt side that, like, we're not using aspirational, you know,
Gotcha.
forecasts to take out debt and then pay carrying cost on it. You know, we've taken it out. I don't know when our next kind of debt raise is, but just a thought.
Yeah. Okay. So I understand now. So no, that was not the case. And in fact, I think the amount that went to the construction fund was 37 million, meaning the amount that we were not able to reimburse ourselves for immediately. So,
okay.
Yeah.
Okay. The other question I just had was on state of good repair, and this is just more of an educational question for me. I think it's page 13. There are just some areas where the state of good repair is, you know, behind. Let's take like parking lot repair, and overall we're at 76% of. Just help me understand when we see some of. I understand like delays, right? Like more MARTA, that totally makes sense. But on state of good repair, is this more like we're trying to balance cash flow in year? Is this more we don't have the capacity to execute all of it? Is it timing? Just would love to hear kind of what drives something like line item 8, but just overall us being a bit behind on state of good repair expenditure in year.
I think that's such a great question, and as we are looking to, get to the World Cup, and this, when we first set up our fiscal year 2025 budget, there's all of these externalities that nobody can account for. It's just the nature of the capital project. So we looked at what, we have a ceiling, we have limited funds. Where should these funds be really spent to achieve our goals? And that really was the methodology where some projects got put on hold and other projects moved full steam ahead. Case in point, the AFC 2.0, we talked about how the project went 100% over the planned value, right? And there were a lot of uncertainties still in design, but as you move forward in the project life cycle, all of those uncertainties really go away, and we have better idea of what the projects are truly going to cost.
Mr. Zagata, may I add to that? You spoke about the parking lot repair, and just as Chayton mentioned, you mentioned also reprioritization. And I think in the middle of the year, we had some reprioritization. So the budget was speaking initially to what we thought a year and a half ago that we needed to do. And then as the year went on, especially as he mentioned AFC 2.0, we a year and a half ago thought we'd do maybe 50% of the work in 1 year and 50% of the work in another year. Yeah. And so thinking, looking over the horizon and saying, okay, well, how much and can we get all this done prior to these large events? We said yes. That meant reprioritizing some of these projects and moving some of the funding from one to another. And so that's a little bit of why you see a difference there on these projects.
That makes a ton of sense. Maybe a request I would have on there, and I just have one more question after this. I know I've gotten long-winded. Would be that maybe halfway through the year, like OpEx, you have to budget, and you have to hold yourself accountable to a budget, and there's a balance of funds. Capital's a little bit different, and I feel like every year we walk out with like a big capital plan, and then at the end of the year we're always looking at a bunch of red and misses. It would be really helpful to in my company sometimes we re-baseline budget halfway through the year based on the new realities, just so that as we get to the back half of the year, we can hold the team accountable to the latest information rather than looking back and saying something like parking lot repair, why are we behind by 50%, when in reality we made really good decisions to land it where we landed. And I think it just might be helpful, particularly on capital halfway through the year, as things evolve. And then the only other question I had was actually more of a comment. This is for more MARTA and for Clayton, but if you go down to page 14, I think it'd be really helpful as well to show the bridge on the cash balances, so ending cash balance on these, because we show beginning and then you can kind of walk into the math. I mean, I think it walks into 305 or something like that. But I just think as a financial statement showing it, the ending cash balance is really important. And the reason I was thinking it is the 57.5 in tax revenue. How is that calculated? Is that just like 55% of the collected and we've assumed and we'll reconcile later? How do we get to the sales tax portion of this?
This goes back to that whole allocation framework of the revenue coming in, where we have an allocation that goes to capital and an allocation that goes to enhanced bus service and sustaining capital. And so when we were first building out that budget, we were going off of that split for how it's allocated.
So it's like a 55% or something like that.
Correct.
Allocation capital. Perfect. Thank you.
Thank you.
And we will come back with a mid-year budget update, touch base on capital for the board.
Ms. Jones?
Thank you for that, Mr. Hunt. That'd be greatly appreciated. I had a couple of forecast questions as well. Ms. Ide and Mr. Pritchett touched on a little bit regarding healthcare and liability costs, and Greg, you mentioned some outlier costs for benefits. Regarding the healthcare, both of those have been consistently higher than forecast for a while now. So are there any mitigating factors regarding the healthcare costs that need to be brought forward for the fiscal year 26 forecast? Like what adjustments need to be made?
So to that end, I mean, in prior fiscal years, we've actually come in under because we didn't have as many claims put against it as we thought. The predictable, controllable costs have come in predictably. So the administrative costs of managing the healthcare have come in pretty much almost exactly where we originally forecasted they would. The real problem is just the fact that we manage claims. You can only predict so much for that. We do our best to look at the way we performed in the past. We look at the current caseload that's out there and see, do we look and see some of these things that are statistically outliers but still high dollar items? How long in the future should we forecast some of those impacting? But it is a lot of guesswork because it deals with how individual people need to move through their medical claims.
And then the second question is, can you walk me through the capital charges forecast? Not detailed, but why there's such a deficit with that?
Certainly. So when we build our operating budget, because it's usually the first thing we build, we assume that all the employee work, everybody supporting capital, all the work that is the overhead to the organization functioning is all kind of located in the operating budget. But from an accounting perspective, we know that some amount of that is used to administer and deliver a capital program. And so we call that the capital allocation. And so what that's designed to do is it's designed to put some accounting transactions that lift salaries, benefits, wages, and overhead items out of the operating budget from an expenditure perspective and sprinkle it among all of our capital projects. The reason why we tend to miss there is, for one, it goes off of employee allocation, not necessarily the number of positions filled. So when you have areas of the organization that are very heavily capital leveraged, like the capital programs, our expectation is most of the employees there are charging their time to capital projects. But it also assumes all unfilled positions are also charged into capital projects. And if you don't fill all your positions in that area, or you have vacancies there, that impacts it a little bit. Also, the indirect charges are predicated on direct charges. So for every direct charge, there's an indirect charge multiplied on top of it. But if you don't have enough of the indirect or the direct charges to those projects, you also have a reduction in the indirect assumption that goes out to that. So that's really what drives that negative there. Another way to think of it is because it's negative here, it's positive on the capital program. You would have otherwise seen higher expenditures showing up on the capital program, and you would have seen lower ones here and a less negative number.
Thank you.
Mr. Lowe?
Mr.
Oh,
Khan,
I'm sorry.
I had a, thank you. And so, vaguely you mentioned something about studies are the highest priority right now. Can you clarify that?
Absolutely, happy to. We started embarking on an initiative about 3 weeks ago, or I want to say maybe about a month ago, where we started looking at what are the priorities for the agency. Is it safety? Is it customer experience? Is it operations? So we created some of those factors, and we started putting grades to it. We are embarking on a much more sophisticated model for capital planning that is really going to help us drive the vision of MARTA forward.
Okay, thank you. And then my last question, I guess, Greg, this may be back to you. For instance, for the slide 15, the top projects by expenditures for more MARTA, City of Atlanta, what would be helpful for me, I don't know if this is true for anyone else, is having some sort of column for project completion rate, or being able to compare where we are budget-wise to where the project actually is, to understand how much more do we need to spend, or where we are in our current expenditures.
Just to ask a quick follow-up question on that, are you wanting something that maybe does a slice of both, calendared activities and budgetary spend, or you just want to focus on the budgetary spend?
Both.
Okay, then I'll work with my capital counterparts and see if we can develop a report that can go with this for that.
Thank you.
Ryan?
Thank you, Mr. Chairman. Greg, we haven't had a chance to meet yet, so I'm sorry if this question is out of turn, but it might be for you, might be for Jonathan or Rhonda. But talked a lot of good conversation on the expense side, but on the revenue side, when MARTA executes on some of the great things that are happening, end of Q3, beginning of Q4, fiscal-wise this year, AFC 2.0, new cars, BRT, all that fun kind of stuff, this should be a good revenue year for MARTA. Can you guys speak, maybe at a high level, what some of the projects looking at Q4 and then World Cup and the impact there? Just give me a primer on that real quick.
Before you answer, just a reminder for everybody, we are going to push, ridership, we want to push our numbers up. World Cup happens in our next fiscal year. Those numbers won't hit That's June, July, our fiscal, we'll get you a little bit of
Yeah,
it.
you'll get
You
5 of the
a little
matches,
bit
you
of
won't
it.
get the big
whole
ones.
kit and caboodle,
Sure,
right.
yeah, yeah.
Greg?
So if we're speaking specific to passenger revenue, I would tell you it's actually the opposite for the upcoming fiscal year. And the reason for that is because we are going to be in the act of replacing all of our fare gates. And in the act of doing so, we're just simply not going to be collecting all the fares that we would love to during that time. There are going to be a greater instance of people walking through while we're replacing fare gate arrays, and we've accepted that and built that into our revenue forecast for the upcoming year. I was also pretty conservative in that too. We're hopeful it isn't that bad, but I planned on it being bad. So, yeah, that's where we are right now on the expectation there. And to Mr. Hunt's point, where we really expect to see that bump and surge in fare revenue is going to be that July of the following fiscal year. And if everything goes well, we should see a reasonable surge of revenues for that.
Anything else? Thank you, guys.
Thank you.
There are no other matters, so we will adjourn the meeting.
Get started in just 2 minutes, just finalizing the system. All right, I'll go ahead and call to order this September 25th, 2025 Planning and Capital Programs Committee meeting here at MARTA. Our first agenda item is approval of the August 28th, 2025 Planning and Capital Programs Committee meeting minutes. Do I have a motion and a second? Seeing it's been moved and seconded, any questions or discussion? Seeing none, please vote. All right, the motion passes. We'll head to our second agenda item, resolution authorizing the award of a contract for traction power station replacement, Wave 1, IFBB 5052, and we have Ms. Davis presenting to us. Floor is yours.
Good morning, Chair Zagabe, Interim GM Hunt, Deputy GM Allen, and other committee members. My name is Kelly Davis. I'm the Director of the Facilities Program Management Team, or the Capital Delivery Group. And as stated, I'm here to request a resolution for the authorization of award for a contract for the Traction Power Substation Replacement Program, Wave 1, IFB B50502. Next, oh, I'm sorry. I forgot about this, y'all. I'm sorry. All right, so the purpose of this procurement is to procure electrical services from a single team to renovate and replace our existing traction power equipment at our traction power substations and gap breaker stations across the MARTA rail lines. While TPSSs, which we call the traction power substations, are generally located at passenger stations, in some cases they are located midway between two passenger stations, and those are called the gap breaker stations, or GBSs. Our tracks are powered by 49 mainline and 3-yard TPSSs, and we have 16 GBSs across our system. This work supports the uninterrupted propulsion of MARTA's rail cars and is the first of 11 waves of priority-based locations. The locations in this procurement include TPSSs at 5 points, which has 2 sites, Midtown, Candler Park, and the GBS near the Ashby Tunnel. Subsequent locations are currently in the planning stages. This system consists of, but is not limited to, the below equipment, which is the medium voltage HD switchgear, transformers, rectifiers, and DC switchgears. To the right, we have a picture of the HV switchgear. This piece of equipment receives the high voltage alternating current, or AC current, from Georgia Power. From there, the electricity flows to a transformer, which then takes the high voltage current and transforms it to medium voltage. Next, it flows to the DC switchgear, where rectifiers convert it to the proper direct current voltage needed for the third well to power our trains. Procurement consideration. On January 14, 2025, we did receive one bid from Cleveland Electric, and they were deemed responsible but not responsible due to the price differential between their bid and our internal estimate. Because of this, the authority was allowed to negotiate with the bidder under the single bid process. Now, award has taken a while because we did our due diligence, because again, the bid was significantly higher than our own internal cost estimate. Since receiving the bid in January, we had a third party perform a cost verification. We engaged a designer of record for clarifications. From there, we had one round of negotiations, to which the bidder did counteroffer. Next, we had a second round, which led to approximately $2.2 million in savings. Once the price was agreed upon, the then internal audit conducted a cost price analysis. In that analysis, they determined that approximately $45 million of the cost was fair and reasonable, while approximately 2.3, required further substantiation. And we did provide that to the internal manager for his review and approval. Based upon the review of the solicitation process, the audit findings, and the substantiation of the question costs provided to the interim GM, it was determined that the bid value of $47.47 million with Cleveland Electric Company was justified. To the right here, we have a picture of the main breaker panel and the oil transformer. The main breaker panel is the central control and safety interface, which protects the power supply and equipment from overcurrents, short circuits, and ground defaults. Below that is the oil transformer. That cools the rectifier by using oil flow to reduce the temperature. The new rectifiers that will be installed are cooled by air, and we use that design for environmental considerations. The cost of this contract is $47,741,841. The term of this contract is 1,380 days. While installation at each site only takes 150 days, much of this time is for the actual manufacturing of the equipment. For instance, the AC switchgear has a manufacturing time of 18 months. The transformers take approximately 13 months. Federal grants do fund approximately 80% of this, which is about $33 million. The remaining 20% will come from local funds. The subsequent ways of the program will be funded through local capital funds. However, the procurements will be federalized in anticipation of additional federal funding. Cleveland Electric has committed to the assigned 15% DBE goal, and the companies highlighted here in blue are the DBEs that they will be using on the project. And with that, I respectfully ask for your approval of a resolution authorizing the award of a contract for the Traction Power Substation Replacement Program Wave 1, IFB B50502, to Cleveland Electric Company in the amount of $47,741,841. Thank you.
Thank you. Do I have a motion and a second? Seeing it's been moved and seconded. Any discussion or questions? Mr. Pond?
Question. This very large contract, and it seems like a contract that would be would draw a lot of interest from other contractors. So in analyzing this, was there reasons that others didn't participate that the best you could tell? It could be that they were working on a project adjacent to this and the competitors felt like they had a strategic advantage, but did you really think through or get any sense for having ended up with one bidder?
I don't know. I don't know if that was analyzed by Contracts and Procurement. I invite Mrs. Holland to stand up and answer that.
Let me just clarify. Many times a contractor will have a very strategic advantage and others will not participate knowing that they're at a disadvantage. So that's the purpose of the question.
Cleveland Electric has done this portion of work before for MARTA, so they did have a slight advantage over other bidders who might have looked to participate.
Okay.
Good morning. We do do an analysis after we receive bids to find out why companies do not bid. Many of them were plan holders or clearance houses who basically take our bids and pass it out to other companies, and then we had a couple of them that were unable to even perform the work, so that was the basis of most of the folks that downloaded. They weren't able to perform the work.
All right, Mr. Frierson?
Yes, so this is quite a bit of upgrade in our entire electrical system in this area. Is this due to the new rail cars coming into play? Is this why we're making these changes? Or is this something that's outdated that we're just trying to bring back current before we make some other changes?
No, sir. Just like with everything, it has the end of life. Our current Traction Power substations reached the end of life about 10 years ago. so they are in desperately need of replacement. This does support the new rail cars as well as the current cars.
It does, okay, great, that's what I want to understand. But that wasn't the reason why we're doing it, just because it was end of life and it was time for us to do it.
Yes, sir.
Fair to say? Okay, thank you, Kelly.
You're welcome.
All right, Dr. Bolton Harris?
And this is just to piggyback off of his question. So the stations were 10 years outdated. So just out of curiosity, why is it that 2 years later we're trying to retrofit them, if that makes sense?
It's not really a retrofit. Currently, our operations, a division of operations, electrical power engineering or EP&E, they are doing everything they can to keep these substations up and going. But it is time to replace them past time. So we have had a few efforts to get this done, and we are finally here. I think this was the third bid or second bid? The second bid that the first bid, I'm not certain what happened, but we were not able to bring it to you for your approval. So we put it back on the street, we made some adjustments, and this is the result of the second bid.
So is it just, is it being newer, is it customary that something that's 10 years out of date, it takes 10 years, this long? I guess my question is like, when would you have started a process to procure funds to be able to replace the units?
This process started well over 10 years ago.
Okay.
It's taken a long time for various reasons, but it has started. Initially, we were trying to do all 38 of our stations at one time, and that was unreasonable. So we had a couple of iterations where we broke it apart in order to do it in waves, and again, they are priority based. So the ones that need to be replaced first, those are the ones that we're looking at now.
All right, thanks.
Thank you.
Mr. Hunt?
Yeah, and this is the beginning of a phase for our traction power substations. This goes into reliability. The train has an issue, electrically related. Often it can be traced back to our TPSS. It's not the sole cause, but can often. So this is critically important, and this is the beginning. So this project gets completed on time and hopefully under budget. We'll be right back here as that's winding down for another project. So we won't have a 10-year gap between end of life and replacement or overhaul.
I'll maybe say this, there's a bit of a joke at where I work that you have some projects that are like painting a bridge, that once you get to the other side of painting the bridge, you go back and start again. And, to your point, this is so important for reliability. So thank you for bringing this forth. Very excited to see the work get going, and this is going to be here for a very long time. So,
Yes,
all right. If no more comments, please vote. All right, the motion passes.
Thank you all. Have a great day.
Thank you. All right, we'll head over to agenda item 3, resolution authorizing the award of a contract for construction services for job order contracting JOC 3.0 program RFPP 50289. Mr. Leach will be giving the update. Floor is yours.
Good morning, Chair Zagabe, members of the Planning and Capital Programs Committee, General Manager Hunt, and Deputy General Manager Allen. I'm Eric Leach. I'm the Director of State of Good Repair and Systems Capital Program Delivery, and this morning I'll be giving you a quick presentation regarding a resolution authorizing an award of multiple contracts for construction services for the Job Order Contract 3.0 or JOC program. Oops, sorry about that. So to give you a little history on the JOC program, the development of the program started back in the beginning of 2023 when the Capital Programs Delivery team requested the use of the RFP procurement method to bring aboard and solicit new construction partners. At the same time in 23, we awarded the Gordian Group, a construction management and procurement team, a contract to assist in the procurement of these construction partners. After the development of the JOC program's process, procedures, and specifications, the procurement of the multiple construction partners began in early 25. After receiving 6 vendor submittals, a thorough review of each was completed by the SEC committee, after which 3 construction vendors were selected. To give you an idea of the scope of work, the job order contracting program will intake various MARTA department requests to address medium-sized construction projects related to building renovations, equipment, electrical, mechanical, and communication installations. These projects will range in cost from $501,000 to $2 million to complement the MARTA Facilities Indefinite Quantity Construction Contract Program, or IQCC, which they have a project cap of about $500,000. JOC will manage the mid-level projects, where the IQCC will manage the smaller projects. Each construction project will be coordinated through our Gordian partner with the construction vendors and awarded to one of the various vendors based on their ability to deliver it. This method will help keep the projects moving forward quickly and efficiently. So the overall JOC 3.0 program has a total maximum cost of $25 million. Each project submitted to the program is vetted and requires the champion or the owner of the project to fully fund the requested project. The current fiscal year has a budget of $250,000, which supports the Gordian management cost only, as the approved project will be funded by their owners. Within the current schedule, we are at the tail end of construction procurement, where we will have requested awards to our contractors, which is I'm here for today. If completed, we will notify all MARTA departments of the kickoff of JOC 3.0 and request new submissions of projects. We currently do have multiple projects ready to start with from previous JOC program, which we are going to get into construction right away to get them started and moving on some older projects. Our Office of Corporate Compliance and Engagement has assigned a 27% DBE goal for each construction vendor within the JOC program. And with that, the Capital Program Delivery Team respectfully requests the approval of a resolution authorizing the General Manager or his delegate to enter into contracts for construction services for the Job Order Contracting 3.0 program, RFP P50289, for the following contractors: Carroll Daniel, Public Facility Services, and SoCo Contracting Company. Thank you for your time and attention.
All right, thank you, Mr. Leach. Do I have a motion and a second on this? Seeing it's been moved and seconded, any discussion? Just one comment from my side. So, one, thank you. I think this is really important. This allows us to be nimble, allows us to go and execute. This is not having contracts like this is how things sit for years without being touched. They should have been fixed a long time ago. My only question is around, I know we have this small value contract. We're putting this in place, which is the medium value contract. Once you get above $2 million, what are our mechanisms there, and do we have something in place or something coming to us soon?
We do. So currently we do have the station rehabilitation program, where we do have A&Es and CMAR partners that are currently engaged. Right now they're regulated just to station work, which we do have a lot of station work.
Yeah.
What we've done in the past is we're getting ready to start procurement for the next, we'll call it phase of station rehabilitation,
Yeah.
where with that we're proposing to have both the A&Es and CMAR partners to do work anywhere. So they'll be essentially, we'll call them on-call CMAR partners, to be able to do the work wherever it needs to be, whether it's a bus facility, a rail facility, or anywhere on any MARTA property to go forward. So essentially the idea is we'll have small, medium, and large programs to be able to address whatever we need to do at any moment's notice.
That's great. That's great. Mr. Hunt?
And just for clarity, the station rehabilitation was publicly procured and came before the board in all the normal course.
All right. Seeing no more questions, please vote. Motion passes.
Thank you.
Thank you. All right, and our final agenda item, resolution authorizing the approval of the fiscal year 26 bus, rail, and mobility services standards. Ms. Smoot, floor is yours.
Good morning, Chair Zagabe, members of the Planning and Capital Programs Committee, Interim GM Hunt, Deputy GM Allen. Today I will be presenting a request to approve the resolution to adopt the FY26 bus, rail, and mobility service standards. The purpose of service standards is to achieve 3 goals. First, to set clear criteria for evaluating services and planning changes. Second, to adopt an equitable and fiscal responsible approach that maximizes effectiveness. And third, to ensure MARTA complies with federal and state mandates, including the MARTA Act, Title VI, Limited English Proficiency, and Seniors.
Our service evaluation is guided by a set of core principles. We aim to optimize ridership, enhance service quality and efficiency, ensure equity and connectivity across the system, reduce impacts on ADA paratransit, manage resources and passenger amenities effectively, and maintain safety and security. MARTA's current service standards focus on 6 key areas: service hours, service frequency, vehicle capacity, on-time performance, bus productivity, and mobility service standards for ADA riders. Together, these principles and standards guide how we deliver reliable, equitable, and effective transit services. Public hearings are required for several service actions. These include implementation of new services, major route alterations, or changes greater than 25% in the daily number of trips. Hearings are also required for non-emergency discontinuations of service and for fare changes. Now we'll move to the fiscal year 26 changes. The FY26 service standards document includes the following updates: a new message from the interim GM, refreshed graphics and images including the front cover, brief updated language about the forthcoming bus network redesign, corrections to any broken links, rewording to omit mention of the 30-foot buses or community circulators, updates to align with the new automated fare collection system, replacement of coming soon placeholders for ART and BRT, updated streetcar service hours, and minor grammatical edits and updated terms and definitions in the appendix. Once the bus network redesign is launched, additional updates will be required. These include service tiers and recurring references across multiple pages, and updated language on contracted services, particularly on demand zones. In conclusion, staff respectfully recommends adoption of the fiscal year 26 bus, rail, and mobility service standards. This concludes my presentation, and thank you for your time and consideration.
Thank you. Do I have a motion and a second? Moved and seconded. Any discussion? Seeing none, please vote. Motion passes.
Thank you.
Thank you. Seeing that there are no other matters to come before, oh, apologies. Pete?
No new matters, just questions regarding the bus network redesign. Update, when is the launch?
April 2026.
Okay. If no other matters before the committee, we'll adjourn this committee and head to the next one. Thank you.
All right, good morning. I'm going to call to order the next meeting, which is the Planning and Capital Programs Committee. And the first item on our agenda is approval of the August 28, 2025 Operations and Safety Committee meeting minutes. And by the way, I just called together we're the Operations and Safety Committee. My apologies. So we're now at the right meeting, and can we have our minutes approved from the August 28, 2025, please? Okay, the minutes have passed. The next item on our agenda is a briefing. The FSO bus transformation. We have Daniel Heck, who's our Deputy Chief Mechanical Officer, and Dewana Brown, who's our Interim Deputy Chief Bus Operations. Good morning.
Good morning, Chair Hardage, Mr. Hunt, Ms. Allen, members of the board. My name is Daniel Heck. Joining me today is Dewana Brown, and we are giving a briefing on our Operational Excellence Program within bus operations. Today I'll discuss FSO, the leadership development activities in operations, quickly discuss our 4 priorities of operational excellence. We will discuss process and program changes within bus operations and highlight some organizational improvements already underway. About FSO. FSO is the management consulting firm that is assisting MARTA operations in our Operational Excellence Program. FSO is a global leader in operations strategy and performance improvement, working in aerospace, manufacturing, transportation, energy, retail, private equity, biotech, and many other sectors. FSO is no stranger to MARTA, having assisted us with other projects such as the electric power and equipment production planning improvements, which started in 2021 and is still in use today and included a total revamp of how our equipment is inspected and how we track labor. Dr. Bolton Harris, you asked a question about the aging infrastructure. Part of the EP&E ability to repair and maintain that aging infrastructure is directly tied to the operational improvements that FSO put in place with us a couple of years ago. FSO also helped MARTA complete comprehensive labor and efficiency standards with our enterprise asset management system and bus and rail maintenance. And FSO completed management assessments of bus operations leadership, including recommended organizational changes. Now, this program that we're talking about today solely focuses on operational excellence, KPI adherence, furthering time standards in production processes, and leadership development. The start of MARTA's Operational Excellence Program centered on leadership development and ensuring MARTA's executive and senior leadership have a solid foundation and understanding of the goals and objectives of operational excellence and a common understanding of where and how we need to improve for our customers. Leadership training started from the top down, and this top-down approach percolates through the entire program. Without leadership buy-in and direction, our 4 priorities fall flat once they get to the frontline employees who serve our customers. Leadership training uses a Q4 leadership model, which focuses on how managers provide a positive impact with maximum results, and we're using a few frameworks to achieve these improvements, such as DCOM, that's providing direction, ensuring competence, ensuring ample opportunity for problem solving, and that there are appropriate motivations for action, both positive and negative. Another is something called IBC, and that's ensuring employees have proper instruction, ensuring behaviors align with the goals, and ensuring consequences influence future behaviors. All of this speaks to development of a continuous improvement culture within bus operations and maintenance. You all have heard of the 3 MARTA priorities, safe, clean, and reliable, but we added a 4th, efficient. Every element of operational excellence centers around the following 4 priorities. Safe. MARTA minimizes risk to the public, passengers, employees, and infrastructure, ensuring a safe and secure transit environment. Clean. MARTA facilities, vehicles, and stations are consistently maintained to the highest standards of cleanliness. Reliable. MARTA delivers predictable on-time service with clear and timely communication of any disruptions. And efficient. MARTA serves as a responsible steward of public funds while delivering best-in-class transit service. Here are some photos of our headquarters command center, and this is on the second floor just downstairs here in this building, and I invite all of the board members to come down on any time, and I can walk you through what the command center is. Now, each one of the 4 priorities has a electronic dashboard tied to Power BI reports with real-time key performance indicators focused on safe, clean, reliable, and efficient transit service. And then we have whiteboards where we pinpoint projects, due dates, and assignments. Every week, a group of individuals meets, and we go over action items, quick wins, continuous improvement culture, and then daily, myself and Dewan are in there looking at how we are performing on a day-to-day basis. And now I'll turn it over to Ms. Brown to discuss the division meetings.
Thank you, Daniel. Good morning, Chair Hardage, Vice Chair Scott, Interim General Manager Hunt, Deputy General Manager Allen, and members of the Operations and Safety Committee. Again, I'm Dewana Brown, the Interim Deputy Chief of Bus. As we move on to the division post meetings, as we're reviewing key performance indicators, we highlight daily OTP and missed trips, along with the MDBF, which is the mean distance between failures and other critical metrics, while ensuring everyone understands current performance against targets. We assess daily operational results while discussing service levels, staffing coverage, and equipment availability, while comparing our planned and actual performance. While identifying service gaps and barriers, we bring forward issues impacting service delivery, such as operator shortages, vehicle breakdowns, and/or detours, while encouraging open dialogue on root causes. We discuss safety, reliability, and efficiency concerns while addressing safety incidents or near misses, evaluating how maintenance turnaround times and bus availability affect reliability, as Mr. Heck just mentioned a few moments ago, and identifying opportunities to streamline those processes. We're developing and implementing resolutions in real time by assigning immediate corrective actions where possible and ensuring clarity on responsibilities and timelines for follow-ups. We're strengthening collaboration between bus and maintenance teams while fostering teamwork by aligning on shared goals and interdependencies while breaking down those silos to improve communication and problem solving. We're also tracking progress and accountability on those action items while reviewing previous commitments and status updates and holding our teams accountable while celebrating wins and improvements. And these division post meetings are held every day between the bus division and the maintenance division. Next, I just have a few photos up here for you all just to see. We have our safety compliance, customer experience, absenteeism, and service delivery and mileage card improvements. While on the safety and compliance side, we're phasing in safety vests and flashlights for the operators to be more visible on the lots and able to perform a better pre-trip inspection while they're doing their AM pullout in the early morning hours, while reinforcing compliance to ensure consistent use and improved safety culture. On our on-time performance, we have our weekly collaboration meetings with our internal stakeholders that consist of our bus maintenance division, field operations, BCC, and other stakeholders to address those barriers and solutions, while continued focus efforts are to meet and exceed our 78.5% on-time performance. On the customer experience side, we heard our patrons and you all as well on the cleanliness of our service. And so we have a pilot program where we have in-service cleaners. Those 2 areas, one is at Lindbergh Station and the other is at College Park, where we have some in-service cleaners that are working between 7 a.m. and 11 a.m. and 1 p.m. to 5 p.m. to ensure that if there are any items that are left, any trash or any beverage spills, those employees are assisting with picking up any trash or wiping up any spills. So that effort started in July, and that will continue, and we look forward to moving that pilot program to other stations. On absenteeism and service delivery, our missed trips and service delivery is trending in a positive. Currently, right now, we're at 97%. Of course, we want to meet our goal at 99.5. And lastly, we have our mileage card improvements, which the training is underway to make sure that everyone understands how to fulfill the mileage card, turning it into maintenance, while the improvements are to strengthen our fleet readiness and ensure safe equipment with fewer service failures are done on a day-to-day. And Daniel, I'll turn it back over to you.
Within bus maintenance, our program is called the Road to 6K MDBF, or how we get to 6,000 miles between failures on our vehicles. This program has about 75 individual tasks and objectives broken into 4 main categories, centered on labor compliance, material usage, preventative maintenance adherence, and minimizing service calls. We've implemented efficiency dashboards as part of the Pulse meeting process, where we monitor workload, production planning, and individual labor assignments for compliance with standards. We've implemented changes in in-service troubleshooting with the goal of keeping buses on the road to minimize customer impacts. We've started what we call the top 10 in bus maintenance, where each shop continually looks at buses with repeat problems, holds those buses for engineering and quality assurance checks, and verifies repairs before the buses are released. We've blitzed the HVAC, or heating, ventilation, air conditioning units, which are one of our highest in-service failure modes. We've started routine radio checks to minimize other common causes of bus delays leaving the yard at pullout. And all this centers on IBC methodology and rolling pinpointed expectations onto our staff aligned with our 4 priorities of operational excellence. As I spoke to before, enhanced QA checks are being implemented as part of our continuous improvement culture. 2 other things we're looking at, how MARTA utilizes employees on modified work, and redefining the pre and post trip process that Dewana just spoke about. We've been at this for 2 months now, and we're already seeing some improvements in bus maintenance processes and KPIs. Now, MDBF typically trends over weeks or months, so when we look at week-over-week trends, we take that with a grain of salt. But fresh off the press as of last night, I didn't have time to include this. Since we started the program in early July, we see roughly a 53% improvement in MDBF, a significant drop in repeaters, and a slight drop in overall on-road incidents, so everything is pointing in the right direction for bus maintenance. What's next? Q4 training and implementation continues with all levels of MARTA management. We're having blitzes in bus maintenance and operations for quick wins and driving a culture of change. The Pulse process continues, as Dewana spoke about. We make improvements about how do we ensure they're sustainable. So this is another focus now that we're 2 months into the program, ensuring improvements continue even after FSO completes their work. The big one I spoke about is the Road to 6K improvement I already discussed. And last, we are including the union and frontline staff in operational excellence, ensuring MARTA and ATU jointly work for improvements that result in safer, cleaner, reliable, and efficient service for our customers. Thank you, and Dewana and I will take any questions you have.
Mr. Zagabe.
Do you want to let Mr. Hunt go for? Oh, awesome. Thank you for the update. I know we've asked about this for a while, so really happy and excited to see this. I had 3 questions. The first one was just the road to 6K between breakdown, which I like. I like a very clear target, fully aligned. My only question here is, we've been getting a KPI packet for a while, and in that KPI packet, the goal is 7.5K. And my question would just be, is the KPI packet target right? Like, should we be reevaluating that target of 6K is what the team is marching towards? Is 6K an interim target? Just would love to understand it, because it is obviously a KPI that we need to work on.
Yeah, excellent point. 7.5K is the goal for this, but any goal needs to be achievable. So this is setting an interim goal that we're marching towards. Once we hit that, we expect it to rise along with industry standards.
Perfect. So the 7.5K is like industry standard?
That's what yes, correct. That's what we're targeting in alignment with other transit agencies roughly our size.
Thank you. The second one was just around missed trips. I saw that as a key KPI here. It's, in my opinion, probably the most important one. It's like the worst rider experience out there. And my only question is kind of, 1, how do y'all track it? And 2, I think it's come up a couple times, but would really love to see that in our KPI packet, because right now we get no visibility as a board into that, but it's just such an important part of the customer experience.
So good morning again. So we're actually, we track that daily. We have our operations admin that goes into the system and retrieves those numbers. But a lot of our missed trips that we do incur is due to absenteeism, whether that's the FMLAs, the calling out sick, things of that nature. But we are working with HR to get staffed up. Our technical training department is working on getting those operators to us. We're not waiting for job fairs. We have staff that are doing interviews weekly. So we're hoping to reach a mark to where we can hit our target and lower those missed trips. But missed trips have been better than what we've seen in the past. But we are working to that goal, I promise.
No, that's great. I think, given that that's trending, would love to just make sure we get into the packets as we go forward. And then the last question I just had is, as part of the scope that they're working on, is there any type of formal executive, presentation that says, this is the culmination of the work, this is the impact that we saw driven, and this is what we think are the key things for the team to focus on ahead? Is that part of it?
Yes, absolutely. We meet with the FSO team, myself and other leaders, Paul Lopes as well, regularly to talk about the scope, what we've already seen, and frankly make changes as we go along, because there's things that creep up that we're finding and we're uncovering that are now becoming more of a priority, like reliability on the vehicles.
Well, my one recommendation there would just be, if there is a final report, I was a management consultant at one point, it's not rare to update to a board or to the CEO. It would be really good. I'm not saying we need to bring it to a meeting, but it would be good to get it so that we can spend some time with it, understand what's an outside-in perspective on our operations. I think it's just really helpful as a board member to better understand. And then secondly, I think it's also exceptionally important as we talk about bringing in a future general manager. I think that's probably a really good outside-in grounding document as to the on-the-ground operations of the organization. And I just want to make sure they don't leave the door without getting something formal that at least some of the board and leadership can take a look at.
Noted, and we will request that and make sure that we deliver it to you all.
Thank you.
Mr. Hunt?
Yeah, I just wanted to echo a couple of things that they said that may have gotten glossed over. We're right in the early days, first quarter of their engagement. We're happy thus far, but Deputy General Manager Allen, Chief Lopes, and myself have met with FSO's executive leadership and made it very clear we are outcome focused as it pertains to FSO, and that message has been driven home, and Mr. Lopes lives with that every day. So we are keenly aware on our directive.
Mr. Frierson?
Yeah, just had a couple of questions. It's great that you have a consulting company like this to help with driving quality improvement. That is huge, and creating a culture that you're trying to create also. But one of the things that I think is important is that, if they haven't already, is to take a journey on the buses. Because the buses will tell you, just ride in the back and watch and hear and experience. It'll tell you just really what the riders are experiencing out there on the routes. And I've been intentional about taking that opportunity to do that. And some of the things that I noticed really could be improved just by their experience. And so a little thing like, okay, so who takes care of the bus when the bus is dirty? Somebody leaves a bag or their lunch that's in the seat or in the back seat on the floor somewhere. And when does that get addressed? Does that get addressed at the end of the route when they clean the bus? Or does somebody say something about it in the middle of the route, and I don't know if it's a driver or someone cleans it up? Those little things that just linger causes people to be uncomfortable about being on the bus. That's just me watching, all right? So I think that if they were to ride the bus, they would experience that. It's easy to do the train, because that's a lot of people. The bus will tell you exactly what goes on. And so I'm hoping that those are some of the things that they're going to get involved in to see just where we can see some ways that we can improve customers' experience, all right? I think that's really important. Another thing that I noticed, and I've been a chance to visit some of the maintenance facilities at some of the rail cars is, and I'm hoping that this consulting company will address that, are making sure that the staff has the tools to be successful, right? And that's very important, because we have expectations, but they need to have the tools to be successful, right? And I think if we really listen to what they need, we'll find that a lot of times they don't have it. And it's hard for us to expect them to do the maintenance and that we are requiring them to do if there's something that's not in place. Whether it's how you track maintenance, whether it's how you see these reported issues go on and get resolved, whatever that looks like. I'm hoping that they will be able to get into that space and really help y'all with developing some practices to help you with that. And that's just my experience just by listening and touring some of the facilities. So, but I look forward to them being a catalyst to help you with what you're trying to achieve. And I know that if you really dig in deep, you'll find some opportunities of improvement, and I'm thankful for that.
Mr. Frierson, if I can, as part of this initiative, FSO has what they call division leads at each one of our bus operating divisions, and these people, they are embedded within the division, so daily they are working with mechanics, with operators, with division staff, with dispatchers, looking at exactly what you mentioned. Do we have the right tools? Do they have the right training? Do they have the right time to do this? So that is absolutely part of this, this operational excellence program.
Dr. Bolton Harris?
Yes, thanks for the presentation, and I like that you're all including efficient in the priorities and focus with this. My question centers around the absenteeism of the staff members when we're talking about, you know, from the budget presentation earlier to now. Has there been some type of evaluation done to figure out, you know, what's triggering the cause? Is it the fact that people, you know, the drivers are exposed to the community and the community comes in with colds, flus, et cetera, and they're getting sick and that's causing them to come out? Or is it a thing of that because of the poor customer experience and maybe being berated by customers? You know, whether, and I'm not saying that the drivers are wrong, the customers are wrong, I'm just saying in these experiences that it ensues some type of depression, right? That makes it difficult for somebody to get up and decide to say, like, today is not the day that I can do this. But just wondering if somebody's taking a look at that to see what is triggering these things off so that you can recommend different programmings to help them. I don't know, like, you know, even as far as a leadership track, you know, for those who you're developing plans that, you know, you see something within them to build them up. Just to do it because, you know, what I will say is to drive, you know, doing a job routinely all the time, multiple times, it can become taxing for people and you see burnout. So, you know, what are the issues that are being addressed to potentially look at that as well as something that may be triggering, you know, for people not showing up to work?
That's a good question, thank you. Paul Lopes, Chief Operations and Urban Planning Officer. We are taking a look at that. As mentioned in one of our earlier committee meetings, working with HR, Shawna and myself, taking a look at reallocating resources to better analyze the root causes of the absenteeism, what's behind it, and also working with our third-party providers who are helping us manage claims and taking a look at what the issues are in terms of absenteeism, what is driving it. So we are doing that. We're also going to be speaking with our unions to make sure that we have a comprehensive picture and take a look at hopefully improving the absenteeism rates and looking at underlying conditions we can address in order to make sure that the experience for our drivers enables them to be able to come to work, and it goes back to the issue we were talking about from Member Frierson about making sure people have the tools. One of the tools we're looking at is proper allocation of work, proper rostering, you know, trying to meet expectations of employees. So we're looking at it holistically, hoping to make a change there. There are, as you've mentioned, a lot of underlying causes for that. Thank you.
Ms. Jones?
Thank you for the presentation. If an operator has a full bus and can't stop at a stop to pick up passengers, how is that tracked, and is that incorporated in missed trips?
So if they're not able to pick up with the full bus, they should open up the door and let the patrons know that that bus is full, and also contact BCC to let them know. So that should be the proper procedure.
So realistically, that may not always happen. You may have operators that may just keep driving and not stop. So I would just recommend maybe finding a way to make sure that that's reiterated as a procedure, or finding some way to track that.
Okay, thank you.
Thank you very much. It was very helpful. We look forward to great things ahead, guys.
If I may chime in?
Yes, Mr. Hunt.
And just Member Frierson, you mentioned riding the bus, and so at the executive level, at a minimum quarterly, our executive team meetings are out in the field. We were at the IOC, the last one. The next one coming up will be at the Brady facility, where we'll have our meeting as well as go through empathy training that staff goes through there. It is our directive, myself and Deputy General Manager Allen, all of us need to be in the field at some point. We have a new program, Peak Period Post will be rolling out. You'll get more details about that, where we'll have more administrative staff out in the, and on the system. But that is a clear directive from the two of us. And if the two of us are doing it, our expectation is for everybody else to as well.
I'll just add to that for the newest board member, Mr. Logue. There are opportunities to join in those field trips, and it's really, really educational to do that. So we'll make sure you get on the list to, when those are happening.
Anyone else? Okay. Our next briefing will be a station management update with Adele Perez, who's our Operations Program Manager, and Jorge Bernard, who's our Deputy Chief Rail Operations.
Good day, Chair Hardage, Vice Chair Scott, Interim GM Mr. Hunt, and Deputy GM Ms. Allen, and members of the Operations and Safety Committee. My name is Adele Perez, and I am the Operations Program Manager. May I direct your attention to agenda item number 3. This is an update on station management for FY26. I will be giving this presentation along with Mr. Jorge Bernard, the Deputy Chief of Rail Operations. First, I want to give you guys a brief description of what station management is. Station management is how we take ownership of our stations, and it's broken up into 3 goals. Eyes on, where we identify areas of improvement as it pertains to cleanliness, maintenance, safety, and operational efficiency. Hands-on, where we act to address these issues and make improvements by making immediate fixes, proactive maintenance, and coordinating with other teams. Game on is where we showcase our improvements and receive feedback by sharing success stories, seeking public feedback, and community engagement. The guiding principles that keep us clean, safe, and reliable are enhancing safety and security, improving station cleanliness, rapidly addressing issues, maintaining and upgrading assets, and fostering community involvement. A key part of this initiative under our Game On is collaborating with local community groups, organizations, volunteers, and other local businesses to put together clean sweep events. When we put these events together, we partner with groups such as Atlanta Clean Walks, MARTA Army, our community improvement districts, neighborhood planning units, and also local businesses, as I mentioned. Our last event was August 23rd at College Park. This was in celebration of back to school. This event had approximately 60 volunteers, which included the City of College Park, Councilmember Karn, also several members from the local high schools, and we also had MARTA Hope in attendance. This is a calendar of our next event dates, including our next event, which is going to be October 25th at Doraville Station. This event is considered our second annual Abolish the Litter Challenge. It's going to be in celebration of Halloween, but it's also a challenge, and the goal of this event is to have 100 participants split up into 20 teams of 5, because we will be giving prizes out to the top teams. We also will be having a couple of gifts for those participants that come out that day. One thing I must say, since we've started these events from the beginning to now, we've received a lot of feedback, not only from the surrounding community, but also internally from a lot of our internal staff members that have participated, also MARTA Hope, MARTA Army, and we also are collaborating with a lot of the local businesses as well. And we expect a very good turnout for our event on October 25th. Next thing I want to talk about is our executive management team Adopt the Station program, which recently went through a refresh. This program requires MARTA leadership to adopt the station. They also are to visit the station on a weekly basis and complete a survey. This program, the goal of this program is to allow our leadership to see firsthand what's going on in our stations, and also take ownership of the improvements that are being made on a daily basis, and also give recommendations and see how we can get bigger things done throughout the year. We have also stepped our game up with our new electronic station inspection system, which began installation earlier this month. This application is going to be accessible on a tablet, and it's going to streamline the entire inspection process with digital checklists and real-time data entry. We will be installing 2 devices at each station. One device will be in the staff room, and then we'll have a device that will be stationed in the custodial closet. These devices will be used by our frontline personnel on a daily basis, and also to conduct inspections. This is going to be a way that we are trying to increase our efficiency and our accuracy with some of the issues that we're having in our stations, and also to make sure that we are staying on task and that our staff are conducting their daily checks. At this time, I would like to bring Mr. Bernard up. Again, he is the Deputy Chief of Rail Operations, to provide additional information on some of the updates that you'll see in this program.
Thank you, Adele, and good morning, everybody. Again, my name is Jorge Bernard. I am the Deputy Chief for Rail Operations, and I'd like to talk to you a little bit briefly, kind of high level, about another initiative that we're starting this next coming month. This initiative is a peak period post coverage. What this entails is for us to have additional staffing during our peak service, both in the morning peak service, which is from 6:30 to 9:30 a.m. and from 3:30 to 6:30 p.m. And the idea is to have additional staffing at key locations throughout our system to be able to better assist our customers. Okay, this program will provide dedicated presence at various locations to assist customers by addressing the customer's concerns directly, reporting any incidents requiring immediate attention, as well as reinforcing the safe, clean, reliable to our customers as we interact with our customers. In an effort to remain safe, because we do hear our customers' concerns, we will be making available to our members that will be participating in this program with the necessary training, such as conflict avoidance and de-escalation, as well as they will also have the ability to be able to contact Market Police directly via using our phones, or by using the CSAY app to address any issues real time. In addition, I'd like to talk to you about some of the events that we just recently handled here during the Labor Day weekend events. As you can see from this slide, there was a lot of events that took place during that busy weekend that kept us both busy and exciting throughout that weekend. There were many events that were hosted throughout the city and affected many points and many of the areas that are within our operational footprint. Here you can see some of the photographs that were taken during the events. To the left, you see a pre-safety or pre-event safety briefing that included operations, safety, Market Police, and other personnel that were assisting throughout the system. This was particularly taken at the Peachtree Center on the south end before the Dragon Con events took place that Saturday morning. To the right, you see some of the signage and some of the stanchions that we put in place in front of some of the escalators, where a lot of the heavy ridership was expected to go to the different venues for different events, as well as you see some of our staff that were there available to assist our customers. Now, the purpose of this was to help us do crowd control and meter those customers going in and out of the escalators. Again, here you see some additional photographs from that weekend. You can see the crowds were very large, and they were participating through all those events at Peachtree Center, particularly on the left here. You know, all these customers came through our system. They rode the trains. They were happy. They were excited to go see all the events and everything that was taking place and all the activities that were taking place throughout the day. You can see on the top center photo and the ones to the right that we did have additional personnel, not only with the A-frames that you saw on the previous slide, but also with handheld signage that were also communicated verbally with the customers to keep them informed about the safety of escalator safety, and as well as the stanchions that we put in place in this one particular at Peachtree Center to help meter those customers as well. And again, here's some additional photographs during the loading of the trains. As you can see, we did have the proper level of staffing that we needed for the platforms to assist with our loading goals. That's basically to assist our customers getting on and off the trains to make sure that make it safely to their events and to the locations where they were wanting to go. They were also utilizing things like bullhorns and signage on the platforms to make sure that the customers were informed as to which trains were coming, which trains they were boarding, and what direction of travel they were going to keep everybody safe. And I would like to take this opportunity also to thank all the members from our various positions and our various departments that came out and assisted us during this weekend. Like I said, it was a very busy and exciting weekend, and we had many individuals that came out and helped, such as our transit ambassadors, individuals from operations, safety, market police, all the departments within our headquarters that came out to assist us, because we know the importance of the safety of our customers, and we want to make sure that we take that opportunity to thank everybody that came out to help us out as well. And with that, Madam Chair, I'll turn it back over to you for any questions.
Do we have any questions or comments? Mr. Pond?
Jorge, we've had the concept for a station manager being responsible for everything going on at the station from an operation, the cleanliness standpoint, and then they report up to supervisor that handles 3 or 4 stations. But I want to go back to accountability. And we've had these station managers in place for a number of years. So what are we going to do from the accountability standpoint and to reward the ones that really do a great job and others that go through the motions, if that's the case?
That is an excellent question, and I know that Adele and I have been talking about some of the things that we can do to recognize those individuals. As you can imagine, the job not only for the managers but the frontline staff as well. Some of the jobs that they do and some of the things that they have to succumb to be able to perform their duties when people are not being so kind to our system, and some of the things that they leave behind for example, for our station maintainers that are cleaning the stations becomes very cumbersome. I heard the comments earlier about about our attendance and why people are calling out, and that's one of the things that people take it very hard when they come to work. They work very hard to clean the station, and as soon as they turn around, they see somebody behind them disrespecting the work that they did. So what are we doing? I think we need to come up with another program, not necessarily for focusing on actually doing the work itself, but more of a rewards program. That is something that we're lacking right now for our individuals that are doing that work up front.
So how will you propose measuring?
For the measuring, we're looking at some of the activities that you saw, Adele, in one of the slides regarding the tablet that we're going to be using. That's going to help us monitor what the individuals are doing as far as cleaning the stations. We'll be able to use that as to see how frequently we're cleaning the station, for example. The other thing is it's going to be used by the supervisors as well and the zone superintendents to track their inspections more real time. So that way we're not doing a paperwork, having to fill that out, go back, file it, and then try to go back and analyze paper. We'll be able to do that electronically more succinctly and more timely.
Mr. Frierson?
Yeah, I want to say I do appreciate what the station managers are doing in that space to try to keep things together. I know that public-facing experience is difficult. I see them go through it while I sit there and watch and talk and just watch how they have to deal with the community. I would hope that this inspection process is not just limited to just the cleanliness of the facility. I think what needs to be addressed also is the equipment issue. If there's a ticket machine that's not working properly, or if there's something that maybe need to be addressed.
Yes.
Yes. Question.
So just so you know, with the inspection tool, we're taking priority as far as using it for the frontline personnel and also for the zone superintendent and care supervisors. But I am working with safety because we intend to add portals on there. That's why we're putting one in the staff room.
Right.
We're gonna expand it once it's been implemented to allow, for example, safety officers, so when they come to those stations, to use that tablet to conduct safety inspections. as Mr. Bernard mentioned before, our care supervisors and our zone superintendents will be using it as well. And when they do their inspections, including the station agents, they are checking equipment. They are checking things within the station. So we are working on that. That is the intention moving for the future of this product.
Okay, so this tablet can be used for a couple of different things, not only the cleanliness, but the safety inspection features?
Yes, because we are embedding our actual zone inspection sheet in that tablet. So there's going to be an option to conduct station inspections, which includes the escalators, the AVIS, the defibrillators, and also all of the equipment in the station as well.
Yeah, well, I understand that that's probably, I'm not asking them to get that far into it, but I still think that the things that the customers experience need to be communicated quickly, i.e. the ticket machines. When they're not working and a number of them not working for whatever reason, somebody needs to know that so that we can be able to get our patrons in and out. And I think that's something that the ambassadors see already in their experience, right? So I thought that this one might be a great tool.
They'll be able to put that in as well.
They will. Also, will these tablets allow you to take pictures?
Yes.
Okay, so that's critical because I understand that.
And just so you know, on
Yes.
top of that, they're gonna have tagging, either QR code or tagging. And what it's gonna allow them to do, they're gonna have to scan where they are in the station. So for
Okay.
example, if there's a tag in the egress, when they go to the egress, they're gonna scan and say, we were here, take the picture. So it's not just a matter of them sitting down, not taking pictures, but we'll know that they went to that zone in that station because they're gonna have to scan where they are everywhere they go.
Great improvement. I think that is so critical. And I want to say thank you for what you're doing with the cleaning, campaign that you have with those that are coming to the stations and doing the cleaning around and picking up. We're faced with the same challenges in our communities with litter and how we get people to understand that you throw it down, somebody else has to pick it up, and we have to be good stewards of that. And I know that the ambassadors and those station managers are trying to be good stewards of this space. But we just got to keep picking it up and keep on moving. I understand that. But I do appreciate them doing those things to make it look nice. All right?
And another point that I want to make to your comment about the being more responsive and more proactive to responding to the customer's needs, with such as the fare gauge, for example. We do have a key that we provided to some of our management staff, such as station care supervisors, that they're able to reset some of those minor errors to be able to get that equipment back operational a lot faster than having to wait for Cubit, for example, to come out and address it when they're so busy doing some other stuff and whatnot. So every opportunity we can to expedite that, we're taking advantage of that as well.
Great. Thank you.
You are.
Ms. Hardage. Ms. Hardage, may I make us?
Absolutely.
Just to address Mr. Pond, I believe he asked, if there's a way that, we can reward those individuals who are, working hard. And I just want to remind everyone, I mean, it's easy to, well, maybe it's not easy, but, a lot of times we will make a call when there's something wrong and the customer is, fed up. We know they're fed up when they've decided to make a call to us. But we also do accept commendations, and we do, from time to time, get compliments from customers for individuals that they've run into, employees that have done a good job. And so we, encourage you, as well as others on the system, if you see someone doing a great job, please call in and let us know, send us an email and let us know. Those individuals, those commendations and compliments are tracked in our customer care Salesforce system. And we do reward them. We recognize them twice a year. We have employee recognition celebrations that Ms. Dawkins and her team put on downstairs in the atrium. And we do recognize those individuals that have those high level of customer compliments. And even those that just get one. I believe that information is sent directly to them as soon as possible. And Mr. Bernard and others will call them into the office and let them know that they're doing a great job. And so in the moment, as well as twice a year, where they can be celebrated in front of their peers and others. So, but worth noting that there are other ways that we can improve upon that for them.
Thank you.
Thank you.
So our next briefing is a bus collision safety event reporting and performance targets with Ms. Gina Major, our Deputy Chief of Safety and Quality Assurance. Welcome.
Thank you. I get to say good afternoon. Good afternoon, Chair Hardage, Vice Chair Scott, Mr. Hunt, Ms. Allen, and members of the Operations and Safety Committee. I'm Gina Major, Deputy Chief of Safety and Quality Assurance. And today I'm going to give a briefing on bus collision safety event reporting and performance targets. In this briefing, I'm going to cover bus collision reporting, specifically what is considered a collision, and then what is considered an FTA reportable bus collision. Next, I'm going to discuss performance targets. I'm going to review our previous bus collision KPI or key performance indicator, as well as FTA's bus collision KPI requirements. And I'd like to note, and we heard it again today, that this committee timely brought up our overall KPI reporting at its meeting last month and ways in which that reporting could be improved. And the briefing that I'm providing today was planned ahead of those comments, but in the same spirit of those comments. So this briefing is just on bus collision KPIs, but a more comprehensive briefing on KPIs is planned to address the board's feedback for next month. First, we want to look at what is considered a collision. And shown on this slide is the definition of a collision according to FTA's National Transit Database, or NTD. And this is a very expansive definition, and it involves the impact of a transit vehicle or vessel with some of the items listed here. Another transit vehicle, a non-transit vehicle, a person, an animal, an object, a rail vehicle, a vessel, or a dock. Next, we will look at what is considered an FTA reportable bus collision. What's reportable to FTA is very specific. It must involve an injury requiring transport away from the scene, a fatality, an evacuation for life safety reasons, property damage of $25,000 or more, or towing of the transit or non-transit vehicle. And the decision tree graphic on the right is taken directly from FTA's NTD reporting guidance. So now we've got collision and reportable collision defined, I will go into safety performance management. So our current KPI methodology for bus collisions is what I like to refer to as the kitchen sink methodology, meaning we count and internally report everything that's a collision, whether it's mirror clips, contact with branches, curb tires, etc., all of it. This methodology makes it very difficult to truly gauge our performance and evaluate the safety risk of those collisions. Now, whereas the FTA reporting requirement is based on a risk management framework, that is, they are specifically looking at collisions involving those fatalities, injuries, high property damages, etc. And it sets baseline guidance for all transit agencies and also makes it easier to compare performance of those transit agencies. And this will be our public-facing KPI methodology moving forward. To dig a little deeper, I'm going to share performance management under our old kitchen sink methodology and then under our updated risk management-based methodology. This graphic shows our performance over the past 12 months under the kitchen sink methodology. The target has been 3.8 collisions per 100,000 miles for several years. We've historically been over that target. The solid blue line shows the past 12 months, and the dashed line shows comparison to the previous 12 months. So you're basically looking at 2 years of performance. This graphic shows the same time period, but under the new KPI methodology. The target under this methodology is set at 5.8 collisions per 1 million vehicle revenue miles. And the target was calculated using the average of the previous 3 years. Now, what's important is this baseline calculation is instructional from FTA, meaning they tell us specifically how to calculate the target. And I believe there was a question, I think, from Mr. Zagabe earlier about, how do we determine our target? Well, under the FTA guidance, they tell us how to report the target. Previously, we set the target based on what we thought it should be. Now, again, our performance over the past 12 months is above target, which means we've had more reportable collisions over the past year than the previous year. But you will also notice that trend looks similar between the 2 years, with increased collisions between August and January. So while this briefing is on safety event reporting and performance management, I do want to mention that some of the continuous improvement activities we have currently in process to improve or reduce bus collisions include the introduction of new technology called LiDAR. And LiDAR collision avoidance technology uses light detection and ranging sensors to detect obstacles and potential collisions in the surrounding environment. And it's also the technology used by Waymo vehicles to avoid collisions, if you guys are familiar with the Waymo cars driving around town. We are also working with a company called SkyTech in implementing this initiative, and have completed all of the mapping for selected bus routes as well as rail, and look to begin testing in the next month. We also have a fixed object campaign. Fixed objects make up the bulk of our preventable collisions, so we're focusing on the things that we can control to improve with regard to collisions. And the FSO Operational Excellence Initiative that my colleagues Daniel Hecht and Dewana Brown spoke on earlier is also a platform we're utilizing to reduce bus collisions. As part of this initiative, we actually recently just discussed 2 public outreach campaigns. One's focused on bus collision avoidance that we would ideally like to work with the city of Atlanta on. The bulk of our collisions actually occur within the city of Atlanta jurisdiction. And we also have discussed in our operational excellence meetings with the FSO team a public outreach campaign on cleanliness of our buses. So that was raised as well. While we've certainly got work planned on our part, we want to encourage our riders to take pride in the bus as well and keep them clean. And then lastly, we're still getting traction from our APTA award-winning hazard reporting campaign, where bus operators are encouraged to report hazards on their route. Through our Safety First and Safety Hotline reporting programs, we find that the majority of items reported are related to bus operations. In looking at bus collisions, it's important to know that each collision is graded to determine if there were any actions that could have been taken by the bus operator to prevent the collision from occurring. Each collision is graded as either preventable or non-preventable. The grading is done by the Office of Safety and is independent of any citations issued by jurisdictional police. Preventability is not to be confused with fault or liability, but rather to ensure that our operators are employing defensive driving techniques at all times. So in June of 2023, about 60% of our bus collisions were non-preventable. 2 years later, that number has increased to 62.5% and continues to climb. So in short, we are experiencing more collisions, and the portion of those collisions are non-preventable by our bus operators. And that's probably not a surprise, and thus the reason for a public outreach campaign in addition to the other initiatives mentioned. So I want to segue into how MARTA is performing against its peer agencies and how those agencies report their collisions. This snapshot shows some of our peer agencies and whether or not they have public-facing KPIs and the target if known. MARTA hovers around the middle of the pack, but with regard to transparency in reporting, what's also interesting to note is that out of these 10 peer agencies, only half of them have public-facing KPIs. And of those, only 3 have a target. So the other 2 just report the metrics. So MARTA is one of only 2 of these agencies that is transparent enough to have not only a public-facing KPI, but a target as well. And the other agency is DART. That's it. That's the briefing. Thank you.
Do we have any questions or comments? Okay, that's it.
That's it.
Oh,
Thank you.
Mr. Hunt?
Unless you're going to
No, I was going to mention
Okay.
this, but go ahead, you do it. Go- no. So the last thing is, are the matters, you'll see that we have, for informational this month, our fiscal year 25 July key performance indicators. And next month, that will be a live briefing. So we look forward to that. Is there any other comments, questions? Everyone have a great day then.